But right now we are around that 25,950 levels for the Nifty 50. The Bank Nifty above that 58,000 mark, up around 0.6% as well. So almost in tandem with where the Nifty 50 is. Let's try to pull up the Nifty heat map and see as to what are the counters that are contributing to that gains of around 0.6%. You have your SBI Life, Grasim, Eternal in green today after seeing profit booking for a couple of days post its earnings. You have your Bharti Airtel, Reliance, Hindalco, Tata Motors, all seeing gains anywhere between that 2 to 1.5 odd percent. So these are the counters that are actually keeping the Nifty going, but there are counters that are putting pressure still. There's BL, which is seeing profit booking down 1.6%. Kotak Mahindra Bank on the back of the numbers that have come in, and of course brokerage's views with a mixed view coming in, down by about 1.5%. Infosys down 1.4% as well, followed by Bajaj Finance, Adani Ports and ONGC down by about 0.7% each. Let's try to pull up the sectoral heat map and see as to what sectors have done during the day. Nifty Realty topping that chart, up 1.7%. So clearly that momentum in the Nifty Realty has started to kick in. You have your PSU banks, which is up 1.6 odd percent, oil and gas up 1.4%, Nifty Infra also up 1.4%. Your Nifty Metals doing very well in trade today, up 0.9% as well. But the only counters in the red includes your Nifty Defense, which is down 0.6%, followed by Nifty Media and Nifty Pharma, which is down by about 0.14 odd percent. Let's try to pull up the advance decline ratio, because that paints a picture as to how throughout the day the broader end of spectrum is done, and that gap has narrowed down. So now you have around 1,255 odd advances versus that of 1,151 odd declines. So almost a 1:1 ratio is what we are seeing with regards to where advanced decline ratio is concerned, slightly skewed towards the bulls, of course. Let's try to pull up the broader markets and see as to what they are doing. The mid-cap 150 at its day's high point, up 0.7%. So largely mid-caps are doing well and slightly better than the benchmark indices, and your small cap 250 is up almost 0.6% as well, also almost at its day's high point, in line with what the benchmarks are doing. Let's quickly try to pull up the BSE 500 before I go on to Sharad for the strategies that he's keeping an eye out on. You have your Hatsun Agro locked in upper circuit. We'll talk about this stock as the stock of the day as to what's causing that rally in the counter. You have your Ratnamani Metals up 11%, FSL, e-clerk services, Welspun Corp, all seeing good gains. And on the flip side, you have your Galaxy Surfactants, Gujarat Fluorochem, Britannia, SBI Cards and Cohen's Life, all seeing a downward trend. But Sharad, what are the trends that you are seeing in the benchmarks, and what are the trends that you're picking up?
Well, Mahima, the entire thing is both Nifty and Nifty Bank, both of them are actually showing a good strength in their charts, and they're actually sustaining. They're near their, we could say, intraday high levels as well. But let's focus on Nifty. That they have touched the 26K mark, the intraday basis, and this is happening for the second straight time in the month of October. October 23rd, we saw the numbers actually going up, that 26,000 levels mark. And today also we saw that it's touching that 26,000 mark and then coming back as well. So we are seeing, of course, the market is trying to push the 26K mark, and the closing will be very important. And sentimentally, it will be very important, especially when it closes above the 26,000 mark. The key support levels that stands at roughly 25,850. Key resistance that I have taken at 26,000 levels. The range is very small as we are going ahead in the day's trade as well. And Nifty Bank, that's near 58,000 levels, a strong support coming in, but only drag, that is Kotak Mahindra Bank, and that is actually pushing down the Nifty Bank numbers as well. That's why my resistance level is on the lower side, 58,100, while the support stands at 57,700. But there are key factors also which you should be watching. Of course, we might see some profit booking also in the latter part of the day, as the European markets, they have opened in a flat to weak opening, as there are important global cues which are being tracked. The first one being, of course, the big tech earnings this week happening in US, and Fed's meet on Wednesday as well, and it's expected that there would be a 25 bips rate cut as well. India VIX actually went up almost 10% intraday high in the day's basis, and this is actually important for the option players as well. Realty Metals, PSU, as Mahima has pointed out, their buying has seen, but certain segments in small cap indices are slightly underperforming Nifty, but net it's even Stevens. Chart setups look good, and if there is a fall, buy the dip strategy would be good for both the indices. But Mahima, we spoke about indices. Let's talk about stocks. What is the stock of the day and what's the rationale?
Right, so I think arguably the stock of the day has to be Hatsun Agro. The kind of rally we saw before the numbers came and after the numbers came, the stock is locked in upper circuit right now, up 20%. And this is because the earnings have come on a very strong foot. Q2 earnings have been very strong in terms of both the top line as well as bottom line. Revenue growth has been highest in over 12 quarters now. Even if you take a look at the profitability numbers, the profits have come in at a growth of 73%, and this is highest PAT growth in the last 5 quarters. And this is the reason as to why the stock is locked in upper circuit. Last quarter, we'd seen that the numbers had not done very well and the stock was hammered, but today it's come way beyond the guidance. Margin expansion also has improved because of operational efficiency as well as better gross margins have come in. Slightly lower than the guidance here, but we'll take a look at those numbers as well in a bit. Increase in expenses has been lower at 14.7% versus that a revenue growth of 17.3%, and that has caused the kind of uptick in your EBITDA as well as margins as well. Of course, there's reduction in finance costs that has also kind of led to the growth in the bottom line as well. Now, let's try to pull up the numbers quickly. Revenue has seen a growth of around 7.2% at that 2,428 crores. EBITDA came in at 325 crores, up 35% almost. Margins came in at around 13.4% versus that of 11.6% earlier, and net profit up 70.3% at that 110 crores. Now this, as compared to where the guidance stands, revenue has come in at a growth of 17% versus the guided growth of around 15%. So that is something that the street has liked, but margins slightly below the guidance at 13.4% versus that guided range of around 14 to 15%. But hopefully the second half fares better for the company and will achieve that guided range of anywhere between 14 to 15%. So I think these are the reasons as to what's causing the rally in Hatsun Agro, which we've chosen as the stock of the day.
Well, Mahima, there is a rub-off effect also coming in stocks such as Parag Milk and Dodla Dairy. All these stocks just pull up. All the dairy stocks are buzzing in trade. And of course, there's a rub-off effect from the earnings impact being seen. And the next 2 quarters is seasonally strong for dairy companies as well. And milk prices also are on a decent levels. And interestingly, there's an IPO coming as well of Milky Mist. So that's what we are seeing. There is some re-rating happening in the street as well. And we'll give you a detailed analysis on the dairy sector as well. There's one more person who will give a very detailed analysis, and that is Amit Goel, partner and co-founder at Blue Oak Wealth. Very good afternoon, Amit. And market chart setups really look strong. And of course, we had given that setup to our audience. But Nifty Bank, what are the key levels to watch and where does this stand? Because do remember, there's a lot of important global cues lined up this week as well.
Yeah, hi, good afternoon, and thank you for having me on your show. I do agree with you that the market is trying to, give some smart pullback, given that it has given away a lot of its gains in the last 2 trading sessions. And today it looks like it is trying to, form a bottom for the near term. So what I would want to do on the broad indices is I would still have a long bias, and any dip towards the, towards the low of the day or even yesterday's low, which is around 25,770 or 800 levels, one could look at, creating fresh long positions, at least from the derivatives perspective, maybe a bull call spread or something on those lines for the next month's expiry, because the bias happens to be on the long side itself.
Okay, Amit, what about your top picks for the day? What would you go ahead and buy, and are those buy calls?
Yes, Mima. So my top pick continues to be Reliance, and I do also have Eternal. Let us first speak about Reliance. I've been, from a chart perspective and from a technical standpoint, I was looking at a breakout on Reliance from a chart consolidation level around 1420. So my initial target of 1450, 1460 has already been achieved. However, I do see a continuation of this momentum technically, and anybody looking to create fresh longs here can consider doing it, keeping a very strict stop loss. Now, since the stock price has already moved up, I would like to move up the stop loss to around 1440, which is the gap level if you look at the charts, and create fresh positions at the level at the current levels for eventual targets of 1540, 1560 levels. This is on Reliance.
Okay. And Amit, what about Utkarsh Small Finance Bank? I mean, there's a strong pullback coming in. The stock is down around 5.6%. Anything specific with regards to where technicals are concerned? Has the bottom been found, or there's still further downside that you're seeing? What would investors who've invested in this counter do right now?
I mean, this stock has faltered to deceive, really, so in a manner of speaking. Most of the small finance banks and MFIs have struggled in the last 3-4 quarters, fundamentally as well as technically, and they have given up a lot of their gains. Utkarsh was also, from the highs of giddy highs of 48, 52 levels, is now trailing nearly half of it at around 20, 22 levels. It has given some bit of a pullback last week. However, if you look at the chart and if you look at the kind of pullback that it is showing today, till it crosses the high of last week, I would not hazard a fresh long position here, because the chart continues to be weak. And until and unless it breaks out of the high of last week, which is 22 odd levels, creation of fresh positions would be a little risky on this counter, simply because the momentum happens to be on the downside.
Amit, you did mention about Eternal. Any specific levels that you're watching out for this counter? Because post earnings, we saw that the stock did take quite a hit, right? Post that, today
Yes.
It's seeing gains of about 2%. So what are the levels that you're watching out on the charts?
So as a technical analyst, one would look at the primary trend, which happens to be bullish, which happens to be on the upside for this counter. And I agree with the results. The stock has seen some bit of profit booking. However, if you look at the pattern which is getting constructed right now, it is seen as taking some bit of support at the current levels. And I'll keep a very strict stop loss of the reversal low, which is the last 3 trading session low, which happens to be around 324. And if somebody is looking to take an aggressive bet here, can take a bet in this stock with eventual targets of 344 or 350 levels. I dare say it might even it could even go back to around 356 levels, given the chart pattern outlook.
Amit, the question is for Realty space. The Realty has been the top sectoral gainer in the trade as well, and I think me and Mahima had found this trend also around 15th of October, around 2 weeks ago, that it's under owned. Nifty Realty Index that time was 13% down. Now it's down 9%. Some value also emerging, and of course Q3, Q4 is seasonally a strong quarter for Realty companies as well. Do we see a positional up move in these stocks, or would you like to wait it out?
So incidentally, even I have been a proponent of Realty and IT as a contra bet. IT, mid small IT, large IT, and Realty as the counters where one could create some sectoral rotation or some positional bets on contra basis. And I dare say that it is trying to give those kind of pullbacks also. It has turned out well. Stronger of the counters seems to be Prestige. Good number. Expected numbers also are likely to be strong. The kind of price moves it is giving is also very strong. However, there has been a smart run up already. So any dips on this counter around 1620 levels could possibly be a good entry point. But given the situation right now, I would not want to enter fresh longs, simply because the run up has already been very strong, and there could be a bout of some bit of profit booking in these counters.
Okay, all right. So that's the view with regards to where some of these realty names are concerned. But the primary market remains in focus, Sharad, right? You have 3 big IPOs coming in. There's Okla, there's Lenskart, and there's also Studs Accessories, which is coming out with its IPO. The price band for this one is set between 557 to 585 per share. It opens on 30th of October and ends on 3rd of November. It's going to be a pure offer for sale for this particular IPO, and of course for viewers, I'm sure they would have seen the helmets of Studs, but they design, manufacture and sell 2-wheeler helmets and bicycle helmets under the Studs and SMK brands. So that's with regards to where the Studs Accessories is concerned. Of course, we'll speak to the management as well. Siddharth Bhushan Khurana, MD in Stud Accessories, joining us now. First of its kind, IPO. What is the thought process and the details of IPO, Mr. Khurana?
This is like the first of its kind in India at least, and I think second globally helmet company to get listed. And before I think, let me tell you more about the company and also about the IPO and the listing, right? So we are into manufacturing of motorcycle helmets, accessories, and sporting helmets. So that's what we do under two brands, which is Studs and SMK. And it's a historic, Studs is a historic brand, was established in 1975, and SMK was established in 2016, which is our premium brand. In terms of, because we've been in the industry for over about 50 years now, so it's a pure OFS, and obviously we've worked for 50 years and we seen some rewards. So there are no other objects of the offer. It's not a primary, it's a pure OFS. And with the promoters and other selling shareholders, they're selling about 19% of equity of the company.
Well, a very interesting company actually coming in, and this is of course the two-wheeler space. You're actually dealing in helmets as well. Siddharth, what are the growth plans for the company going ahead? And of course, you have already mastered your core business. Is there any diversification plans there? And if it is there, what would be these companies, or maybe the products which you are trying to venture into new places?
So first I'll talk about the growth, and historical growth I'll talk about more. So if you look at, as you said, the margins have been growing decently, and going forward, the strategy would be more around exports. Domestic market is growing, and the recent GST news for the motorcycle sales is going to help the motorcycle industry. So we expect the domestic industry, we have been growing decently. And for the export side, I would say that going forward, export is a bigger growth strategy for us, and it's a larger addressable market. The total addressable global market is about $2 billion, and that's where I think the most of the growth strategy in the future lies around. And on the domestic side, I think the recent, as I said, the recent GST change on motorcycles, not on helmets, but motorcycles, is going to drive the motorcycle market. And obviously, we are a derivative of motorcycles in any case.
Okay, Mr. Khurana, exports form 22% of your total sales. To what extent do you see them contributing? What's the strategy going forward for the growth of this business, and what are the tailwinds that you're seeing?
So I think on the export side, as I said, right, the total addressable market is $2 billion on power sports helmets. When I say power sports helmets, it's scooters, motorcycles, and EVs. So, and then there is other market like our other verticals, which is sporting helmets and which is accessories business. So there are also large markets in export. So I think in exports, the addressable market is quite large, and that's where we're seeing the growth coming out of, as I said, right? And the strategies around growth, we are growing in a lot of countries. Historically, if you see, our last year growth is close to about 30%. And historically, we have been growing decently in exports. So I think in exports, it's more of a market share gain than the market itself growing substantially. The market is expected to grow at about 6% as per the industry reports. But I think our growth strategy, our price to quality ratio on the products and the acceptability of the products in these markets, like our bigger markets would be markets like Colombia, markets like Australia. We find a lot of traction for the brand, and the brand is getting more and more known there. On the domestic side, you said yes, there is competition. So it's a three-player who are substantially bigger in the market, which is us, Vega, and Steelbird, as you said. And I think the market itself in India is growing. So I expect as the motorcycle market grows, we, as I said, are a derivative. So that's how it looks like at the moment on the domestic side.
That's interesting. Mr. Khurana, what are your Capex plans as it is in OFS? So what will be the expansion strategy going ahead?
So we are establishing a new manufacturing facility right now. We're calling it as Manufacturing Facility 5. And this new facility is expected to start in last quarter of this year. But the revenues will really start flowing in from the next year for that facility. And this facility is being built in two phases. The first phase will start now, and the second phase will start later, maybe 1.5 years after that. And this is gone, our current capacities are 9 million. And with this new capacities coming in, the total capacity will go to 12 million products. Now, the total Capex on this new capacity will be close to 150 crores, out of which almost 50% has been done. And the balance will be done, as I said, in 2 phases. And it'll start, the first production will start in last quarter of this financial year.
Well, that's a pretty interesting viewpoint coming in. But of course, why should the investors invest in the IPO? What are the top 3 reasons? If you had to ask your prospective investors, what should be there? What are your key pointers?
Okay, so I think the first is the legacy of the company itself. It's about a 50-year-old company, so there is enough history on the company for the investors to see. The second big thing I would say is the historical growth that we have given, and it's historically, if you see, the numbers look pretty good. There is no debt in the company. It's a profit-making company, so decent returns historically. And the third, I would say, is, as I said, the export and domestic side, right? Both are exciting for us. So these are the 3 big strategies, I would say, or rather the things that investors can see.
All right, Mr. Khurana, thank you so much for giving us those details and, of course, telling our investors as to why this IPO, is attractive from your lens. But Amit, I'll quickly come to you on some metal names. Metal is one of the sector that's been in focus, has been buzzing. Any of the counters where you still think an entry makes sense, and from here on, momentum is there to stay?
So last time when I had come, I was asked the same question. Metal was in an upswing. It continues to be in an upswing, and it has moved up further. So the risk reward continues to diminish. So any fresh entries in this sector itself is now offering lower risk reward ratio. So I would if I have entered the sector earlier, I would continue to hold on to them and look very sharp, look very closely for signs of reversals for profit booking to get out of this theme. Otherwise, fresh entries is not giving me great risk reward, so I would like to avoid for the time being.
Okay, all right. So that's with regards to where the Nifty metal is concerned. But the other counter that's been in focus is Zen Technologies. Now, this is the second quarter where the overall revenue growth has been disappointing. And in fact, we spoke to the management, Ashok Atluri, the chairman and managing director of Zen Tech, about the current ecosystem, whether it's favorable for companies like Zen Tech. This year will be muted, but expected next 2 years, how will they be? Will they be strong in terms of order flows? And how will the second half be in terms of execution? Listening to what he had to say.
We have really excelled not only in soft kill, but remote control weapon station from our partner, our subsidiary AI Turing, the system itself from UTS. All this converged, and we can see the pride not only in Zen Technologies but even in the armed forces, that Zen has actually delivering products that are absolutely world class. So to your question, that it is absolutely just delay, procedural delay, nothing, and we don't feel any sense that there is going to be any change. I think the growth is expected to be as strong as ever, and I have been talking about on a cumulative that we'll be hitting 6,000 crores. That still, I think that still holds very, very strongly in my mind that the next 2 years, this year may be muted, but next 2 years are going to be very strong.
All right, so that was the management of Zen Tech. Quickly, Amit, your view on the charts for Zen Technologies. It's down 4.5% today itself in trade. But do you think if at all there's a trade there?
So, starting of this year, I had recommended this. I had taken this position also at around 1,000 levels when it had fallen very sharply. Unfortunately, it has come very close to those levels. It's currently at 1,300 levels, and it has faltered to deceive. It has given up all the gains that it had made during the India-Pakistan conflict, which was the run-up to it. The numbers don't show any encouraging signs. The chart does not show any encouraging signs. I do see maybe a retest of 1,000 levels is in the offing. So anybody who wants to take a punt on this counter can wait a little bit more. Probably around 1100 and 1000 levels is where one can start accumulating in this counter, because there the risk reward definitely favors fresh entries, not at the current levels.
Okay, so the risk reward levels become attractive at 1100 odd levels when it comes to Zen Tech, and then the buy the dip strategy can be taken place. Of course, let's take a quick break. Stay tuned to NDTV Profit. Up next, we'll bring you all the chatter behind the dealing rooms in our segment Heard on the Street.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributed to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है.
अरे और रहमान.
सोनू निगम के लिए जोरदार तालियां.
Welcome back to India Market Close at NDTV Profit, and the markets are actually sustaining at a great levels. Nifty has again touched the 26,000 mark, and this is the October month, 2 days it's coming in, and Nifty Bank also there is a good support coming in. And I think Hiral, we have introduced that.
Will the bullish momentum continue or not? And I think Alex has been doing India Market Open. Let's see what his commentary tells us basis the guest conversations. And I think you've done some number crunching as well, which tells you that the momentum will sustain.
Well, it all depends on a couple of things. When is the Fed outcome?
I don't know.
Wednesday.
Yeah.
So you could see a situation.
So Thursday morning for us.
And also, incidentally, by the way, a lot of people would not have seen this, but I was looking at the monthly numbers for October. And of course, there are 4 sessions apart from today left.
Right.
You are seeing gains of 5.5% at this point, which is the second best month in 2025 for the benchmark Nifty 50. My only point is, of course, foreign institutions starting to buy. Some elements of short covering is what you've seen over the last few sessions, but you could see some profit taking. If you've seen run-ups in quite a few of these stocks, look at a bigwig like Reliance Industries up and about today. It's moved quite substantially in the recent past as money get taken off the table.
Well, yes, I think I agree with you. The European markets also agree with Alex. The markets have started opening in a very mixed manner. Some are in the red also. And of course, this week itself, globally, if you look at it, 2 big events are there. Alex mentioned
the
Fed meet. But there are big tech earnings as well. So the entire world will be there will be a pause.
But Sharad, you're forgetting also the possibility of a China and US deal. You have the meeting of President Donald Trump and Xi Jinping.
And the impact that could have as well in terms of commentary and in terms of October. This is the best October since 2023 because that was, I think, 2022. 2022 is when October gave you returns of 5.4%. That has now, you've gone beyond that at 5.6% this time around. It was 24 where it was a negative return of over 6%. I mean, negative growth of around 6%, negative downtake of around, say, 2 to 3% in 2023 as well. So, you know, there is something that is brewing and probably the bullish momentum should sustain. But let's get in Jay Bala, founder and chief market technician at Cash the Chaos, to understand more. Jay, welcome to the show and always a pleasure to speak to you. You know, 3 of us were just discussing right now 26,000 twice in the month of October in the last 2 trading sessions, that's on the 23rd and today. How sustainable is it? Number 1. And 2, will this bullish momentum continue when you talk about banks as well as Nifty 50?
Yeah. Hi, Hiral. You know, I've been maintaining the 29,000 objective for the Nifty since April. And I've reiterated that in most of our interactions. And you know, from a 2026 perspective, I still maintain 29,000 as the objective for this market. When it comes to the short-term up move, yes, 26,104 that it saw on the 23rd, there was not a significant resistance. And the fluctuations from the September low have still got further higher highs to come through. So the only significant resistance for the market is the all-time high at 26,277. I think it will take a few days to probably a week for that to get conquered. So it's probably coming either in November or in December. So most probably in November. I'm continuing to maintain the bullish view, the short term and the medium term. When it comes to the backing index, it broke the backing index crossing 56,150 a few weeks ago. That was very important. It negated a inverse head and shoulders pattern. And when a market negates a technical pattern, the move afterwards that comes after the negation is far more important. That's the reason why you're seeing bullishness in the banking sector now. And we have been bullish on the leading banks on the private sector, on the public sector space. And I even pointed out that SBI, when it crossed 837, that is going to be a breakout and going to reach record highs, and it has done so. So, so the fuel is receding, but it's still got some more in the tank to go.
Okay, you know, I want to, this is the first time I'm speaking to you about your target, Jeb, and you've mentioned 29,000. I might have missed this the last time we spoke, but what is the timeline that you're expecting this to take place in?
Time is always approximate, Alex. So
with that caveat, no one's going to hold a gun to your head, Jay. But when do you see this happening?
So in April, I put it out as a 12-month objective, and I'm still maintaining that. We are 6 months into 4 months, 4 to 6 months into this. So I'm anticipating the 52-week highs to get crossed in a couple of weeks time frame. And so on the all-time high, and 29,000, I'm anticipating it to come through somewhere about March to June.
So if you're talking about around, say, 29,000 in FY26, which are the stocks that will lead to this rally, and what should investors then buy to actually encash on a Nifty at 29,000?
Yeah, good question. I've been bullish on autos, and autos is the leading sector, and I would consider Reliance itself as a sector, which you were speaking just before I came on air. Reliance is actually breaking out. It's got potential to scale somewhere close to about 1,700. So even from current levels, it's got good potential. I would watch out the real estate sector as the other one which could lift the markets. We have had some significant picks from there, but keep your focus there. And the other sector I'm also liking is the capital goods space. And I had identified comments from the capital goods space sometime in May, June. So so keep your focus on Reliance, a little bit on the auto, ancillary autos more than frontline autos, and capital goods as the other sector to watch. Capital goods and real estate.
Well, interesting picks coming in for the Nifty 29,000 target, but let's come back to the short term. What would be the short term targets if you have to pick, and what would be your important technical picks?
Yeah, I have two picks for today. One is, what do you call correct? What is it? Okay. Yeah, Bharti Hexacom. Yeah, Bharti Hexacom is breaking out of the inverse head and shoulders pattern, and the stop loss is about 1720, price of 2 of 2080. And the next stock is Kirloskar Oil. You see today, oil stocks are doing well, and Kirloskar Oil is a laggard today, and it's got a very good strong base in the short term, and I expect it to test the all-time high close to 1400 odds with a stop loss of 828.
You know, Jay, I must confess that when I looked at your face and you're trying to remember the name of the stock, it seemed so familiar because I think I make that same expression. I'm horrible with names, and when I can't remember somebody's name, I have the same expression. But it's all forgiven as long as the call is right. And so let's repeat the call just so everyone knows. Bharti Hexacom, you have a buy on this one. The objective, of course, is 2080. The stop loss of 1,720. The stock is up and about in trade today, quite considerably so. It's one of the buzzers. We'll talk about more buzzers beyond this one, but this one, watch out for this. Long on Kirloskar Oil also being spoken about, 828 is the stop loss and the objective of 1,400. But let's talk about a few more newsmakers and buzzers, so to speak. And we've got Varsha joining in to tell you the list. A few interesting names in the earnings space, of course, but beyond that, order wins, there are a couple and more developments as well. Varsha, what have you picked?
Yeah, so, a lot of stocks are actually buzzing on the back of order wins, starting with GPT Infra, wherein they've received order of rupees 195 crore for conveyor belt system, and the order execution period is for next 12 months. Then you have PTC Industries, wherein they've received a purchase order from Gas Turbine Research Establishment and DRDO. Now they'll make ready-to-fit turbine blades, and the company is expecting order book of rupees 1,000 crores to rise substantially. Then you have Vikran Engineering, wherein they've secured an order of 354 crore from this is for solar PV power project in Maharashtra, wherein the execution period is for next 12 months. Lastly, you have Knowledge Marine and Engineering, wherein a company has received an LOI for hiring 160-ton electric green tug, and the contract value is 385 crore, and the contract is for the next 15 years. So these are all the stocks, which are buzzing on the back of order inflows.
Okay. So that's with regards to where, three of these names which are buzzing in trade and are newsmakers. In fact, very quickly, Jay, any view in terms of what charts are indicating for GPT Infra, PTC Industries, Vikran Engineering and Knowledge Marine, all of them buzzing on the back of news, but anything where you see signs of bullishness to continue?
Most of them are the stocks I don't watch regularly. But yeah, PTC in India is something that I track closely. It's got a very, very positive setup. 161. It put in a hammer bottom at about 161, and from the pullback from the
Jay, we're talking about PTC Industries, not PTC India.
Okay, PTC. Oh no, I haven't had a look at that.
Okay.
And most of the stocks are something that I don't watch.
No problem. Apart from that, the other aspect that we need to look at is all your OMCs. Now, Reliance Industries, we've already addressed in a way as to what's happened. The deal with Meta is providing it some bit of impetus. But apart from that, your Singapore GRMs are on a rise. In fact, in the last 10 days, GRMs have increased from almost 0.41 per barrel to almost $8.6. So that is very strong. And in the second quarter, they've averaged at around $4.1 per barrel. The reason why this is happening is because the sanctions on Russia, that is what is probably impacting the availability of the final product. Secondly, the strikes in Ukraine or by Ukraine have actually hit the Russian product exports. And thirdly, your planned capacity shutdowns are leading to an overall short supply. These are the three reasons which are impacting the Singapore GRMs, basis which you have names like IOCL, BPCL, HPCL, RIL, MRPL, Chennai Petro. In fact, Chennai Petro reported numbers as well in today's session. All of them are seeing some strong moves today. And every $1 per barrel rise benefits Chennai Petroleum the most, to the tune of around 26%, MRPL around 24%, IOCL around 11%, RIL, HPCL, BPCL in the range of almost 2 to 10%. So that's what's happening with all your OMCs. Jay, anything that you have in terms of OMCs which you would advise investors to buy?
Yeah, I was looking at all the OMCs before looking at Kirloskar Oil, and I think IOC and HPCL are stronger than BPCL, but all three look attractive. BPCL is probably a better looking structure, but slightly weaker of these two. But a stop loss of about 320 for BPCL, but it's more like a short-term trade rather than an investment bet. So I would possibly expect about 365, 370 with a stop at 320 for BPCL.
Okay, Siddharth Khemka of Motilal Oswal joining us right now. Siddharth, as always, thanks for taking the time. Good afternoon to you. You just heard what Hiral had to say about the OMCs. We were looking at the GRMs and which companies stand to benefit the most. A couple of these stocks buzzing in trade today. What do you make of this development, and would you be buying any one of these?
Yeah, hi, good afternoon. I think OMCs, we are looking at it positively from this quarter earnings as well. So overall, if you look at the up cycle for the oil marketing and the oil refining companies, I think that is on an upswing, and we remain positive. However, as you rightly said, on a quarter-on-quarter basis, two things are very important. A, the inventory gains or losses based on the crude oil prices, and B, the quarterly GRMs. I think between the three oil marketing companies, we are most positive on HPCL. We believe that with the new Capex coming in, the growth in HPCL, which will be much stronger compared to some of the others. So while the GRMs benefit all three in terms of the newer capacity, we would prefer an HPCL where we have a buy rating and a target price of 535.
Okay, all right. Siddharth, I want to ask you about Zen Technologies, and I'm hoping that you've seen the numbers as well. The management spoke to us in the morning today, and for me, one of the big takeaways in that conversation was the fact that the second half is expected to be a little soft as well. It's not expected to be dramatically better than the first half, though order win will likely kick in the second half. So the expectation is that next year, you will see the fruit of that. And the disruption that was caused by this Operation Sindoor, etc., where the mix of orders that they have catered to has had a bearing on Q2. What do you make of the numbers, one? What do you make of the outlook for 6,000 crore of revenue in a couple of years?
Yeah, I think if you look at Zen, they have been struggling in terms of new order inflows. Even Q1 was in that sense weak. And yes, there was some new order inflows after the Operation Sindoor, but still we believe that the 6,000 crore, the 600 crores order book, that is not matching to the revenue potential that the company has. And hence the order inflows that has moderated. We have cut our FY26, FY27 estimates by about 18-20%. Nonetheless, with the existing order book and the segments that they are present in, we believe a 20-25% CAGR growth in the net profit that can be achieved, given that there is a strong focus from the government, especially on the defense procurement and the defense side. We have seen the Capex from the government in some of the other segments waning off, but that continues to be pretty strong in the defense. So overall, I think there are better investment opportunities within the defense space, something like HAL that we like, Bharat Dynamics, HAL and BEL. These are our preferred picks within in the defense space. Zen Technologies, we are neutral and we'll wait for the uptick momentum in the order booking, post which we can look at it from a positive view.
So that's Zen Technologies. Stay with us. We're just seeing some commentary that's coming in from the UK government. If we can pull up that one on the screens right now, and this is when it comes to JLR, where they've said that they will be supporting JLR through provision of guarantee for the commercial loan. Now, the reason why they are ready to support a JLR right now also, Alex, is because the cyber attack that happened, it's not only impacted JLR, but a lot of your ancillaries in and around JLR within Europe, and because of within UK, it was almost a blow of around what, $2.5 billion, which is around 1.9 billion pounds, and that is the reason why.
For the economy, right?
For the economy, yes, for the UK economy. And that was the reason why they are ready to support a JLR as well on this. If you can just pull up those lines once again and the chart, on the back of which you're seeing some bit of positive momentum, but they will be supporting JLR through provision of guarantee for commercial loans. What would this mean? Actually, we will try getting Puneet in as well.
Just logically, I'm just thinking about this, right? You have a situation where they didn't produce anything for a while.
Correct.
And so therefore cash flows would have gotten dramatically impacted.
And there was a rating downgrade also.
Absolutely. And so therefore working capital availability would be a little bit of a question for a company to restart operations and kickstart it to the point where you have to cater to long pending orders in various geographies. You have to remember that apart from Chery Automotive, which is a joint venture that Jaguar Land Rover has in China, its primary manufacturing facility is in the UK.
I mean, you talk about Britain's car production. They said because of JLR, September production fell by 27%. Wow.
It's like a domino effect.
Right? That is one. So majorly it was your economic damage plus the supply chain issues that were faced across, because it's not only JLR in terms of the overall car, automotive parts is also what JLR manufactures and supplies, right? So it was the entire supply chain that was hit, and I think that's the reason why UK is forthcoming right now to come in and support it when it comes to your commercial loans as well.
So I just wonder if we can get a very quick view from Siddharth. Siddharth, of course, a raft of these bad news coming through for Tata Motors, and now we're specifically talking about Tata Motors PV, which houses the JLR entity. Would you use these opportunities to buy if you have a long enough time horizon? Because ultimately there could be a recovery in the cards.
Yes, I think most of the issues that you discussed are there in the price, but I think the company will still take some time to recover from that. Obviously, the cyber attack issue has led to production halt, and there is a government support from the UK government. But the bigger issue or overhang is the demand weakness, especially in the key markets of Europe and China. I think, especially for the passenger vehicles business, that is a key driver. And for at least for the near term, next 1 or 2 quarters, I think the stock could remain under pressure. For the stock to do well, I think the global tariff issues needs to get resolved. The company has to see clear visibility in terms of competition from the EVs. Obviously, they are also getting a lot into the EV segment. All new models that are being launched are in the EV segment, but still they are facing a lot of competition, I think, on that front as well. So I would still say a neutral or an underweight on Tata Motors until we see some clarity in terms of growth. Between the two, I would be more positive today in terms of the CV business, given it's a domestic, pure domestic play. The India growth story continues to do well, while the on the global front, the passenger vehicles looks more attractive, but it comes with its own challenges as well as volatility in terms of the numbers, margins that JLR keeps reporting on a quarter-on-quarter basis.
You know, the PV business is the chart that you're seeing. CV business is not yet listed. And once that list is only when you will be able to see the chart of that stock. But thank you, Siddharth, for that one. Let's actually put focus on the bull versus bear segment that we have, on India market close. The stock we're looking at is Coforge, with the kind of run-up that we are seeing in today's session, very stable at around 4% since morning. We have my colleague Jasmeet, who's with us to tell us what are the bull and the bear cases. I know we had an argument or a discussion as to very few bear cases, majority bull cases, but I'm sure he's been able to find a lot of the other bear cases as well. Jasmeet, what do you have for us?
Well, right, thank you for that. So now if you look at the numbers, we have a good set of numbers coming up from the management. Revenue expansion, margin expansion, even the profit have expanded. Let's quickly understand the bull and the bear case for the company. We see margins have sharply expanded on the back of improved performance. On the other hand, we also see that the brokerages have been divided, given that is this margin growth sustainable? And given the management has also guided a margin of 14% by the end of FY26. Now going to the next bull case, we see that there's strong traction seen across BFSI segment as well as the various segments of the company. But on the other hand, we also make a note that the Europe still lacks as a geography and sees a slow growth movement. Now, in terms of brokerages, Jefferies expect the margin to cross 14% by FY27. On the other hand, we see Ambit, which still targets an unchanged margin, and it targets within 13.8 to 13.9 and not to cross the 14% mark. While if you look at the other bull case, the JP Morgan have raised the target price to 2,500. But given Ambit has still kept it unchanged, citing that margin reasons. On the other hand, we see that this particular company leads the IT pack given the higher revenue estimates. On the other hand, the valuation still at 56, which is still the higher compared to par. Now, if you look at what the street expects in terms of the ANR, we see that the company has buys at 29 while sells at 6 and 3 with hold, a return potential of just 6.5% after the 4% run up today. We also spoke to the management. Do listen in.
Well, we've been at about 500 plus for a few quarters now. We believe $500 plus million should be more or less, obviously factoring in the occasional vagaries up and down, should be more or less the baseline that we should operate at for the foreseeable future. We feel very good about the order intake number because the large deal velocity and the large deal median size of the firm has been going up almost every quarter and of course every year over the past few years and quarters. So at this point in time, 500 we believe, and this was all organic, is a good minimum baseline for Coforge to aim for going forward.
All right, one of the stocks of the day, Coforge, and we'll get your view on it in just a bit. But before we do, a lot more stocks to talk about, and this is the dealing room buzz. Soumya Sarkar joining in with the regular feature on this program, which is heard on the street. This is where Soumya pulls out from his pitara all of the stocks that he's heard about from the brokerage rooms, from the dealing rooms. What are you picking up today, Soumya?
Multiple stocks that remain in focus. Firstly, it's Hindustan Aeronautics. Now, what dealers are indicating is that there are sell flows on DI desk in trade today for Hindustan Aeronautics, and they're saying that there could be some delay related to its Tejas aircraft, and that's the reason we are seeing this selling pressure coming in for Hindustan Aeronautics. Second stock on the list is Greaves Cotton, where dealers are indicating that there are buy flows on large HNI desks. They're expecting some positive announcements, some positive corporate development to come in next week when it comes to Greaves Cotton. For Voltas, dealers are indicating that there are sell flows on FI desk. Valuation is one of the major concerns that they have highlighted, and that's the reason we are seeing this selling pressure coming in for Voltas. Apart from that, when it comes to, given the fact that we are in midst of earnings, Pidilite, Infra and KFin Tech, these three stocks remain in focus. There are buy flows on large HNI desk in all the three counters, and dealers are expecting or saying that the Q2 numbers for these three counters could be much better compared to what the street is anticipating. When it comes to Cello, there are buy flows. There's some potential deal announcement is likely to happen soon when it comes to Cello World. And when it comes to oil marketing companies like IOCL, BPCL and HPCL, yes, there are multiple reasons why these counters have been buzzing in trade. But apart from that, what dealers have also indicated for these three counters is that the flows are also on the back of strong result expectation. In fact, PAT number or the net profit number could be much ahead of what the street is anticipating, and this could be also because of the LPG compensations that the oil marketing companies have received. So keep an eye out for IOCL, HPCL and BPCL. The PAT number could have some a component of the LPG compensation. And Vodafone Idea and Industar was part of our segment on October 24th, where we had indicated that positional buy trades have been taken by multiple HNIs and large HNIs, and this was largely in the back of the court hearing, and this trade has played out well for them given the fact that both the counters are gaining in trade. Well, pretty interesting list of stocks Somit gets us each time he comes on this segment. But moving on, we are focusing on the companies now, joined by MP Taparia, MD of Supreme Industries. So, of course, looking at Supreme Industries, we will be talking about the company and, of course, the numbers which have come in. That also will be in focus. But good afternoon, sir, for joining us. And, of course, yes, so first question, of course, is on the numbers side. The numbers largely look in line with the street estimates, but the EBITDA we saw, there has been a slight downtick coming in. Could you just give us the entire picture, especially of how the performance has been, especially on the volume growth front, because you have given a guidance cut as well. So why you have given this guidance cut, and will that, impact your earnings over the next 2 odd quarters or so?
No, we are given the volume guidance for the company as a whole, that is 12 to 14%. And volume guidance on plastic piping between 15 to 17%. We are given because we told it's the beginning also of the year, but first half we have grown only 11% in pipe volume. It was lower due to the extended rainfall and early break of rainfall. We are given the understand that the reservoirs of water are full by more than 90%. The demand for usual segment is going to be very robust in the second half of the year. So we anticipate to grow by 15 to 17% of plastic piping system and overall between 12 to 14%.
Understood. Okay. So therefore, from that perspective, I do want to also understand, and thanks so much, Mr. Taparia, for taking the time. About the downtick in the EBITDA in the quarter gone by, is this also something that, of a challenge that you're facing on the pricing front? Because the demand was a little softer, one would assume, in the second quarter. Did you also face a little pressure on the pricing front? Do you anticipate that that will improve in the second half?
EBITDA was affected in first half on plastic pipe due to drop in price of PVC.
Okay.
So we had an inventory loss.
Okay.
Understood. Now the price are at the bottom level, so we anticipate that no more price destruction will be there in the second half.
So, Mr. Taparia, okay, you're saying that volumes will pick up then in the second half. 2, your margins will be better in the second half as well on the back of better raw material prices. So, my third question to know you now is, in terms of the ABS project, what is the capacity utilization? Because you've just commissioned the new 70,000 TPA ABS plant, and you've expanded, and you've expanded the compounding facility in September 2025 as well. So the timelines and utilization targets for this one, and what's the targeted volume growth you're expecting?
Now, for ABS plant of 70,000 installed capacity, we anticipate 60,000 ton annual production. And now the plant is running very smoothly, so we intend to run plant fully in the remaining 6 months. And the PVC ABS is imported, so we will be filling the import gap only.
Okay, so so my last question coming to you is, if all of this said and done, what is that demand outlook looking like for H2 FY26 if you're saying everything is going to be on track? Because you're saying the volume guidance is what you've cut, and that is 15 to 17% growth in plastic pipe operations in FY26. So what are the concerns that you are looking at?
As of today, no concern. We anticipate demand is going to be quite good. From the housing market was good in the first half also. It will continue second half. And agricultural demand, which was poor first half, will be better in second half. We don't have much business in infrastructure, and we are not very optimistic on infrastructure demand going forward in second half also.
Okay. Mr. Taparia, wish you all the best in the new summer 2082, and thanks so much as always for taking the time and for speaking to NDTV Profit.
Thank you very much. Thank you very much. For 2082, your wishes, we very appreciate your effort.
Absolutely. Thank you so much, sir. All right. Let's talk about levels, and let's. While we were speaking to Supreme Industries, I wonder if there's been a change for the benchmark at all. Are we still below 26,000? Chances are we are at 25,953, but holding above that 900 mark, and I think that's going to be crucial to watch. Would you? Okay, we'll find out whether or not Jay Bala thinks that's important after this very quick break. Do stay with us.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम के आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas.
Welcome back. You're watching India Market Close. And earlier today, my colleague Neeraj actually pointed out to you, if you watched India Market Open, you will have seen that the snapshot of the earnings for the companies that have reported so far, just over 300, and the earnings growth is actually about 14% significantly higher than what was penciled in. Penciled in was actually lower single digit. So things are looking much better on the ground. In fact, that is what the latest economic data is also pointing to. Finance Ministry's September economic report is pointing to solid momentum in India's growth story through the second quarter of FY26, despite global uncertainties. With strong industry and services activity, a stable labor market, and festive demand kicking in, the outlook stays upbeat even as external risks persist. Rishabh is joining in with the key highlights. Rishabh, what are the key details in this report?
Right, some few interesting insights that have come in with regards to the Indian economy, especially in the September monthly economic report. A few key headlines that we've picked up is the fact that the economy has remained resilient in quarter two of the current financial year as well. That is something that the monthly economic report talks about. What we're also seeing is that in the FY26 for the overall year as well, the resilience looks good. It looks set that the economy will be growing and not degrowing in the current financial year. What we're also picking up is the fact that the reforms that we're seeing in the economy, like the GST reforms that came in with the rate rationalization, slabs coming down, as well as the rates itself also coming down, those are the sort of reforms that will continue to support growth and also help in the face of various external factors that are upsetting the economy, such as the US tariffs. And it is reforms like the GST reforms will help cushion the impact of such external factors that are impacting the economy. What we're also picking up is the fact that there are certain global uncertainties. They will continue to pose downside risks. But what is interesting to note is that the services sector, that remains very strong. The industry itself is maintaining its growth. What we're seeing is the fact that you had the IMF also come up and they also upped India's forecast to about 6.6%. RBI sees it at roughly 6.8% GDP growth. And what we're seeing is that for the overall year itself, for FY26, that the Indian economy will grow. So all positive signs coming in, even in the face of geopolitical as well as global uncertainties coming India's way.
Thank you so much for that, Rishabh. In fact, that's an interesting takeaway that's coming in from the economic report as well. But before I go to all the guests, let's just quickly pull up an NDTV Profit exclusive where construction giant L&T is set to sign a deal for shipbuilding and repair works in India. Who are they signing it with? What is the deal all about? And the value of the deal? Agni joins us with all the details. Agni, over to you.
Larsen & Toubro is set to sign an MOU with Maersk about shipbuilding and ship repairing here in India. Now, while the financials are very fluid in nature right now because it will be a non-binding agreement, L&T expects an inflow of around $400 million over the few years that it takes to build container ships for Maersk and to repair existing ships for Maersk. Now, sources have been also telling us that the ships will be repaired and built out of their Tamil Nadu plant, and the MOU can be expected to be signed anytime in the coming week. So this is a developing story. We have reached out to L&T for their comments, so do stay tuned for more updates.
Okay, thank you, Agni, for that. We will wait for more updates. 0.5% up move on L&T. Siddharth, let me come to you. L&T, you're talking about a shipbuilding deal there. The stock is up around 0.5%. Alex did speak about Coforge as well, but the way earnings have planned out. E-clerks has been buzzing as well on the back of earnings. If you have to look at these three companies as well as a Welspun Specialty, which has just reported numbers. In fact, the company has posted a profit versus a loss on the back of which a strong move coming in on that one. Anything that you like from this list, and anything that you would want to add?
Sure, Hiral. I think Coforge is something that we have been quite positive on. It is one of our top picks within the IT space, and the company has been delivering quarter after quarter consistently healthy numbers, and on back of it, I think this market is also rewarding the stock. Despite the macro headwinds, I think they reported strong revenue growth of almost 6% on a constant currency terms. Margins have seen improvement, and the management has guided for a stable margin going ahead. The order book is pretty strong, and we believe that the strong executable order book, resilient client spending across various verticals, that bodes well for the organic growth for Coforge. Plus, you also have the cross-selling opportunity with Cigniti remaining a high synergistic opportunity for the company. So overall, I think we are very positive on Coforge. We have a buy rating and a target price of 2,400, a decent upside even for current level. I think Larsen is something that we have been liking while the Capex spending has come down, but in terms of the defense spending, I think that is something that has picked up. The global order book and execution, that is also seeing significant growth. The green energy portfolio, I think that is also seeing strong growth, and the recent efforts by the company to get into the new age businesses like semiconductors, your smart meters, I think that is also having a diversified led growth for L&T. So in the large cap space for a steady growth, I think Larsen will continue to do well. Again, we have a buy rating and a target price of 4,300 there.
And e-clerks, what did you make of that? Because the stock, arguably the stock of the day today, Siddharth, 7% up move, and we were laughing about it earlier, but the kind of growth that they've reported on a quarter-on-quarter basis is something you normally be used to when you look at a year-on-year performance, 30% PAT growth. What do you make of the numbers?
So unfortunately, Alex, we don't cover or have not had a look at e-clerks.
Okay, no worries. But let me go to Jay on some of these names, right? Of course, some of these stocks buzzing on the back of earnings or other developments, but others, we're trying to find a reason, Jay, but we're not necessarily able to identify the exact reason. Something like an RR Kabel has been in the top 5 gainers of the Nifty 500 all day today, practically. 6.5% higher today. First Source also up and about 8% higher. E-clerks as well, 7.3%, arguably the stock of the day on account of earnings. Any view on any one of these? E-clerks, I know for a fact, has run up quite significantly over the last 3 and 6 months, 70+% over the last 6 months.
Yeah, e-clerks is a very interesting stock, but the risk reward from here on is a bit wide for you to punt here. As long as the stock can stay about 3,900 up can stay. That's the reason why I said the stop loss is quite wide. But I believe the stock is extending and I think it's still got a powerful upside left, and the stock can probably cross 6,000 in the coming weeks and a couple of months time frame. Coforge, yeah, it's I believe it's in the last leg of its move, but still fresh record highs around 2,200 possible. RR Cable is a very interesting stock, a relatively new listing, and it's gone from 854 to somewhere about 1,500 and pulled back. That pullback is a near perfect 50% Fibonacci retracement. That low was about 1150 odds, and from there it's starting to perk up. So if the stock is setting on for the next leg of its up move, we are possibly looking at a very powerful move. So this is one of my candidates for today, and you can be long on the stock with a stop loss about 1160, possibly expecting fresh record highs close to 1900.
All right, let's just get the SRF on chart. Of course, the numbers largely we are seeing it's below the street estimate, a slight beta, and the numbers, of course, it's a year-on-year basis. But do remember that the refrigerant gas prices, that they have been going down, and that doesn't augur well. And we had actually pointed it out last Friday as well. And other Florination players also are in their days low levels in the red as well. But of course, SRF's guidance and their commentary, that is also something which the street will be watching out for. And right now, currently, we are seeing there hasn't been a significant up move coming in, but if you can see the profit numbers, that is slightly above what the street was estimating, and these numbers are flashing on your screens as well, but nothing much happening on the stock. Stock still down roughly 2% odd. Siddharth, just a quick check on the Florination players. The overall refrigerant gas prices, they are on the downtick. I just wanted to get your view on it. Like, they have actually already run up. So would we see more pressure coming in going ahead?
Yeah, Sharad, I think we were expecting a strong quarter from the likes of SRF, Navin Fluorine. For SRF, we were expecting better margins, and our EBITDA number was about 825 crores. I think the number that has just flashed on your screen was about 775. It's been much lower, and I think the prices which have corrected in the recent times, I think that is impacting the margins. We'll have to see the details. But the stock prices had reacted positively earlier and moved up on back of an expectation of strong quarter. But I think the downside is limited because on a longish term basis, we see strong demand for the chemical business that they are in, and especially led by improving pricing again. But I think the trend needs to be tracked. The technical textile business, that was expected to see a muted quarter for SRF. So overall, I think a mixed quarter, but again, we'll need to see and how the prices trend up. And I think that would be the key driver for the stock price going forward.
So that's with SRF. In fact, we've been discussing this since Friday with the kind of pressure that all of these players are seeing. SRF, Navin Fluorine, as well as a Gujarat Fluoro, on the back of your R22 refrigerant gas market prices, which are down, which Sharad had pointed out. But very quickly, Jay, do you see an opportunity to buy with the kind of correction that has already come in? Because they've come off quite a lot from their 52-week highs as well. So is there a potential upside that you're seeing from now?
Are we talking about Gujarat Fluoro?
Gujarat Fluoro, Navin Fluorine, as well as SRF, 3 stocks.
Yeah, I see SRF has got a very interesting stock, and it's got a breakout on its long-term charts. And as long as the stock stays about 2,600, I think this is a massive breakout. And I'd spoken about this with Neeraj in January 2020 when I was bearish on the markets. But the stock is yet to explode the way it's expected to do. And maintain an investment stop of about 2,600 on a closing basis. I think the stock has got potential to even scale 5,000. So it's a horizontal consolidation and a breakout after several months. So usually when a stock breaks out in such a pattern, the move is on the higher side is equal to the horizontal consolidation erected upwards. So it's got a very huge potential here. Gujarat Fluoro, it's not that great a stock, and I would avoid it for the moment.
Is the view on Gujarat Fluoro. All right, significant development for Vodafone Idea, and this is in the case that they were arguing for AGR dues. The Chief Justice of India has said that the matter has been adjourned and the government is willing to hear the Vodafone Idea view. Danish Anand joining us to tell you about what emerged at that hearing today. Danish, tell us, what's the latest here?
Well, in a big relief to Vodafone Idea, the Supreme Court today permitted the central government to consider Vodafone Idea's viewpoints on the overall AGR dues. Let me tell you that Vodafone Idea had reached to the Supreme Court last month, in which it highlighted that how back-to-back fresh AGR orders are creating a huge impact on companies' financials, and moreover, the fresh AGR demand that DOT had furnished to Vodafone Idea, it amounts to somewhere around 9,400 crores, and considering the financial situation of the company, Vodafone Idea has reached to the Supreme Court seeking a relief on interest penalty and interest on penalty. But in today's hearing, which finally happened after 3 deferred hearings, SG Tushar Mehta, who is representing the government, he said that considering that how big Vodafone Idea is, and it has almost 20 crore users and it has thousands of employees. So for their betterment, they have thought that the government will be considering some kind of proposal. And later on, we saw H.G. Tushar Mehta handing over a document which is a proposal from the central government side to the Supreme Court. Mughal Rohatgi, who was representing Vodafone Idea, he agreed to this offer, and he obliged to Chief Justice of India that the top court is finally considering Vodafone Idea's situation right now. So all in all, if we see, it is a big relief for Vodafone Idea, as now the ball is between the Department of Telecommunications and Vodafone Idea, and it is expected that in the coming few days the government will be giving a proposal to Vodafone Idea, and then we will come to know that what sort of money will Vodafone Idea will have to finally pay to the central government.
Thanks a lot, Danesh, for giving the views for Vodafone Idea. Just a quick check on the chart. Jay, Vodafone Idea, it has been a significant journey coming in, at least from 6.5 levels last month. As there has been some profit at the table. It's a retail favorite stock. So I would just like your view. If somebody is holding the stock, having a 30 to 40% gains coming in, is it the right time to do profit booking? We saw some profit booking actually happening as well in the earlier part of the day.
Yeah, that's right. That's a exact question you need to ask. And the stock is actually completing an important price structure under the LFA model, known as a flat structure, which was expected to exceed the 2000 January high, 25 January high, and it's done that. And what it does over the next couple of sessions is going to be pretty crucial. The max, I would say, the stock can rise from current levels is capped. And I would expect the stock to not cross 11.5. So if it were to close below 9.5 or 9.25, I'll be a bit cautious for people who've been long. That must be your trailing stops here.
All right. So that's a view on Vodafone Idea. Bear in mind that this is a stock that sees considerable volatility. So consult your advisor, or think about the risk that you're willing to take before you dive into something like this. But let's talk about profit intelligence for the day. And we are taking a deep dive into Kotak Mahindra Bank. The reports of the numbers took place over the weekend, and the stock is under pressure. In fact, one of the worst performers on the benchmark Nifty 50. And that's probably because of the anemic growth that the company or the bank reported, despite the fact that some of its metrics were actually pretty good, not least of which its margin performance. Vansh joining in to break down the numbers and to tell you what is likely the factor that the street has not liked. Vansh?
Well, thank you for that, Alex. So let's understand what the street, what's disappointing the street for the Kotak Mahindra Bank as per Q2 FY26 results. Firstly, it's the NIM. Now the NIMs have contracted for Kotak Bank. Now this is on the back of the decline in the yields and the change in the asset mix by the bank. Also, what we have seen is the provisions have remained elevated. And that has led to the profit growth being hurt for Kotak Mahindra Bank as well. Microfinance continue to see losses, which has led to the loan book contraction as well. If we talk about the credit card book, it has also declined on a 14% on a YY basis as well. If we talk about the unsecured loans, they have constituted 9.2% of the book versus 9.7% in the June. So clearly the focus have been shifted to the secured part as well. Lastly, if we look at the retail commercial vehicle business, now the business is likely to witness continued stress as per management commentary as well. Now let's also understand what the brokerages have to say for Kotak Bank. Firstly, they believe that the stock is trading at an elevated valuations. So clearly this limits the scope for significant re-rating or upside for Kotak Mahindra Bank. They also say that the sharper NIM, the NIMs have been the fall in the NIMs have been sharper compared to the streets for the first half of FY26 as well. Lastly, they believe that the drag in the unsecured loan mix is expected to weigh on the growth in the near term for Kotak Bank as well. Lastly, if we look at the analyst recommendations, we have 48 buy calls for ICICI, 46 buy calls for HDFC, and only 28 buy calls for Kotak Bank, with a significant upside potential for ICICI Bank with 23% and just 10% for Kotak Mahindra Bank. So this is how the overall picture is panning out for the entire banking sector as well.
Got it. All right. Thanks so much for lining that up for us, Vansh. And let me go straight to you, Siddharth, on what you made of the numbers. You have a situation where the growth was weaker than the other two large private sector banks that have reported numbers. Would you say that you can look past that, or would you say that this is a good enough reason to avoid it or to even press the sell number? Siddharth, I think you might just be on mute.
Yeah, sure. So I think, Alex, if you look at Kotak was a mixed quarter, and especially in terms of our expectations, it was broadly in line. The NIM contracted 11 basis points to 4.54%, but our estimates were about 4.51, so marginally better than our expectation. In terms of advances growth, I think it was pretty strong at 15.8%, led by growth in the business, SME, housing loan, as well as corporate advances. So I think we are willing to look past the current weakness, and we are seeing that what even the management has highlighted, that the NIMs are expected to expand in the coming 2 quarters, and with a higher exit rate in Q4. So that should be something that the market should start liking. And we believe that the slippages that have declined on a Q-on-Q basis, PCR stood at about 77%. And with NIMs now the bottoming out and improvements expected over the next 2 quarters, I think the stock can do well. But if you ask me, is there a better choice between the large cap banks, as you rightly highlighted, some of these stronger numbers from ICICI, that continues to remain our top pick in terms of strong growth, in terms of valuations, and SBI figures in with a good growth and a lower valuation. So I think while we have a positive view and a buy rating on Kotak, there are better banks in the large size, the likes of ICICI and SBI, which is preferred over a Kotak.
ICICI SBI preferred over a Kotak from a fundamental view. Let's quickly just address the flashes at the bottom of your screens where Ashwini Vaishnav has come out and said that some of the plants under ECMS have been approved. 4 Keynes projects have been approved for PCBs, laminates, camera and modules. A polypropylene film plant of SRF has been approved. Sirma Strategic Ascent Circuits has been approved for multi-layer PCBs. And across 7 plants, it's an investment of around 5,500 odd crores that is expected. Let's just pull up SRF, Keynes and Sirma. 3 counters, no major moves coming in on a Sirma SGS right now. Let's put up a Keynes as well. You're seeing a mild spike that's coming in on this counter. So we're looking at an investment of around 5,500 odd crores over 7 plants which have been approved under the ECMS scheme. But apart from that, you know, media stocks is what we need to address as well. And this is because of the government ad rate revision. They're planning to raise the print media ad rates by 26%. The approval for all of this is still pending, and it will be effective mid-November 2025. Post the Bihar MCC lifts. The first hike, this is the first hike that is happening since 2019, where that time the government had actually increased rates by almost 25% on the back of which names like Jagran Prakashan, DB Corp, as well as HT Media are seeing some smart moves in today's day of trade. Jay, very quickly, let's just take a quick view in terms of charts. Are you seeing further momentum on any of these names?
Yeah, HT Media looks like an interesting setup there. It's consolidating around the 28-29 mark, and a breakout about 29 will propel the stock to a faster move. But it's just a trading call, not an investment call. The medium to long term charts get a breakout only about 36. So there's but the stock, if it can break out 36, it will be a double bottom confirmation for the stock, and it can propel the stock even higher. So a short-term, trading call potential here, but 36, across of 36 would make it a slightly higher time frame holding call for it.
Well, that's interesting. But for our viewers, I just like to point out one important point. This counters in the media space, especially in the print related, they are low volume counters, and the newsprint prices, as per my channel checks, are on the higher side as well. So it might be a short term trade which Jay was speaking about. But Jay, what would be the BTST, buy today, sell today strategy today, seeing the markets?
Yeah, I have BTST on Grasim. Grasim looking an interesting.
Okay, we might be having a little bit of an issue with Jay's feed. Jay, if you can hear us, buy today, sell tomorrow. What is the call today?
Yeah, BTST on Grasim. Grasim at current levels looking quite interesting. It's breaking out on the short-term charts. Stop loss at about 29.10 itself is good, but let's be a bit more conservative. Until a stop loss 28.99 is a better stop. So expecting it to touch 29.60 tomorrow.
Okay, so that's with regards to Grasim. That's an interesting one.
Top gainer on the Nifty.
Yeah, top gainer on the Nifty as well. Ola Electric is also very interesting, and this is on the back of the approved fundraise. I think the reason I want to talk about this is you're talking about a current market price of 52. And if at that price you're doing a fundraise of 1,500, it's way below the IPO price as well of 76 rupees. And I think that is what the street is not happy about. And the stock is seeing some bit of pressure. Now, the company has not really mentioned the reason of why they're doing the fundraise. And they already have a gross debt of around 2,000 odd crores at the end of the first quarter. So you have to take that with a pinch of salt. And the most minimal Capex was what was planned for FY26 as a year. So when you put all of this together, I think where this is headed towards, why the fundraise is the key question. In fact, let's just take a quick question with Siddharth Khemka. Siddharth, Ola Electric fundraise, 1,500 crores QIP, current market price below issue price or IPO price of 76. Is that what the street is not liking, or do you have another story around it?
So if you look at Ola, we don't have coverage, but I think last time around the quarter, the management clearly highlighted that there is no need for further Capex and fundraise, and that is what the market had liked. I think that is one more disappointment. And again, as you rightly highlighted, if the dilution is happening at these odd levels, that is a bit of stress for people who had invested earlier, either at the IPO or at higher levels. So I think there needs to be a clarity in terms of the Capex as well as the capital required in terms of the business. That is something that will give comfort to the investors.
Okay. There are a few significant buzzers and point well made, Siddharth, on Ola Electric. A few small cap buzzers. I pointed out Bharat Rasayan before the start of trade today. Significant development, corporate action. There's going to be stock split as well as bonus issue. The stock is down about 7.5% or thereabouts. Alicon Castalloy, volumes are 191 times the 30-day average, I think, if I'm not mistaken. Bharat Wire Ropes also seeing significant volume. You have Hatsun Agro that is moving quite considerably also on the back of a quite considerable increase in the PAT number for the quarter gone by. In fact, at upper circuit continues to be at that level. I just wonder if Jay has a view on Hatsun Agro, a very quick one if at all. If it opens up, would you suggest an entry at this point, or have you missed the bus already, Jay, in your opinion?
I don't think so. But the stop is slightly aggressive. The stop is at about 855 from positional trading point of view. The high it saw about 1,040, 1497 in 2021. I don't think that's a complete high, and the stock needs to cross that to complete the price structure that started from 2015. So I would anticipate this to be a positional trade rather than a very short-term trade. But I think a new high is coming past 1,400, 1,400 in a few weeks to a few months time frame.
Well, thank you very much, Jay and Siddharth, for joining with us and giving your technical as well as fundamental perspective on the markets and the stocks. But it's a great day for the Indian markets, and the second straight day where we saw 26,000 levels being breached for Nifty as well. Currently, it's near there, 25,980 levels, and even Sensex is showing a good up move. Nifty Bank comfortably above the 58,000 mark as well, and we saw a significant buying in the last 15 minutes of trade as well. Expected that this would be ending at day's high levels when I'm talking about the benchmark indices. Now, of course, let's speak about the actual heat map, where the action is lying in the Nifty as well. Largely, we're seeing a sea of green. Grasim, last moment, we are seeing the stock pushing up. That's up almost 3% SBI Life up almost 3% on earnings, and Reliance, that has been the main steady. view of the day. Today's stock is up almost 2%. In the red, if you look at it, largely this is Kotak Mahindra Bank, which has been dragging the Nifty banking index as well. That is where our focus will be. And now let's look at how the broader indices have fared. Let's pull out the advanced decline chart. And of course, the small cap space, that itself, we are seeing a slight betterment up move coming in just the last 10 minutes of the trade as well, but a very narrow range shifting towards the bull side. Now looking at the mid cap space, it's expected to end at the day's high levels, and the same story goes for the Nifty small cap index as well, and the alpha numbers are actually looking good, and there's a strong recovery coming from the day's levels as well. If you look at the BSE 500, Hatsun Agro stuck in upper circuit after their earnings, but e-clerk services, AB real estate also doing the trick. Stocks are up. Swan Energy, interesting pick, 4% up. Do remember Maritime week is going on. We can see more announcements coming in the shipping space as well. Gujarat Fluoro down 3-odd%. SBI cards also taking the brunt, and certain names we're seeing profit booking as well. Also, let's move out from the BSE 500. Now let's look at how the overall what to expect for tomorrow. And the first cues, of course, India Bulls Enterprises and Dhan Service merger would be happening, so that is something which we'll be watching out for. Shares to exit the anchor lock-in, there are certain names which I'll take. Shanti Gold is there, roughly 4-odd%. And for fundraise, there are two important board meets happening: small cap Shriram Proteins, and in the mid cap we are having Aditya Birla Real Estate. But the question is, we are back to the earnings season. Adani Energy Company would be coming in with their earnings. Apart from these, larger names include Canara's Bank twins, or you could say Canara Group twins, Bata India. From the tire space, we're having JK Tyre, Jubilant Ingrevia, K Fintech, and Sona BLW as well. Let's pull up more earnings which we'll be focusing on. TVS Motor, it's a very important earnings which we'll be focusing on. Adani Group stocks, Adani Green, Adani Total will be in our focus, and Premier Energies as well. Lastly, I'd like to point out the other set of earnings which are there in focus, and I think this list is enough. And of course, today the markets have also done really wonderfully well. And this is it from our show at India Market Close at NDTV Profit. Stay tuned.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer, and also a top Indian pro at the moment. One administrator who's doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much. You're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
the NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम के आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributed to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight into the show. But first up, let's see how the markets have fared today. Viewers, Nifty, Sensex end near day's highs. Nifty ends a whisker away from 26,000 level, whereas Sensex jumps more than 600 points. Advance decline ratio was tilted in the favor of the advances. Let's look at the sectoral picture. That was sharply tilted in the favor of the green, with most sectors ending the day in the green. PSU banks, oil and gas and realty have led the gains. Defense, media and pharma were on the back foot and ended the day with a tinge of red. Hatsun Agro was buzzing away in trade after a stellar set of numbers in Q2. So the dairy major has reported a massive surge in its bottom line. Net profit for the quarter has skyrocketed by over 73%, marking the highest profit after tax growth the company has seen in the last 5 quarters. So this impressive performance was fueled by a robust top line, with the company achieving its highest revenue growth in over 3 years, or you can say 12 quarters. So more critically, the growth story is rooted in fundamental strength. Hatsun Agro saw strong margin expansion, driven by improved operational efficiencies and also better gross margins. IT major Coforge has delivered a mixed bag in its second quarter, though its results were broadly in line with street estimates. So the key takeaway here is that growth was overwhelmingly led by the travel vertical, and this was signaling a strong demand in that sector. However, the company has seen a modest slowdown in its core growth rate. So constant currency, that is the CC growth for the quarter, has clocked in at 5.9%, which is a noticeable dip from the 8% growth reported in the previous quarter. So on a positive note, the company's deal pipeline remains robust. Coforge has secured a deal win worth $514 million, which is slightly up from $507 million in Q1. So this includes 5 large deals signed across North America and the APAC region, which should bolster the future revenues as well. Let's keep it going with the earnings. So it was the 11th straight quarter for data analytics firm Latent View Analytics. So the financial services vertical has delivered a massive 29.9%. That is, nearly 30% sequential increase there. Growth was also solid in the CPG and retail, boosted by effective deal execution. However, the margins were squeezed lightly by higher operational cost, and this is largely due to increased visa and marketing spends as the company invests for global expansion. Keeping going with earnings. So second straight quarter of the revenue has declined for Zen Technologies. Consolidated revenue for the quarter has tumbled sharply, and profit also shrank year on year. So the company attributed the muted top-line performance to procedural delays in order finalizations. This is stemming from the emergency procurement measures by the government. However, Zentech, has showed tight cost control, managing to expand its margins thanks to a 55% year-on-year drop in the material cost there. So the firm also reported that its R&D spends for the first half of the year are down slightly. Management remains confident, stating that deferred orders are still in the system, and they continue to maintain a robust order book of over 675 crore rupees. So that's about the earnings today, viewers. Let's shift gears and talk about some order wins that were in focus today. So HUDCO has signed a significant agreement with Jawaharlal Nehru Port Authority, that is the JNPA. So this pact is aimed at exploring and financing the infrastructure projects at the JN port, which is a key container port in India. So the total value of the projects covered under this agreement is estimated to be around 5,000 crore rupees. Let's keep it going with the order wins. Moving on to NCC Infrastructure. So infrastructure firm NCC has secured a massive new contract there. The company has received a letter of acceptance, or the LOA, from Central Coalfields Limited. So the project is valued at a significant 6,828.9 crore rupees, and this involves the extraction and transportation of overburden and coal in Jharkhand. Next up, we have Vikran Engineering, which has secured a significant order from Illume Energy MH Solar One. So the contract is valued at 354 crore rupees and is a turnkey engineering, procurement and also construction, or the EPC project. So it involves the development of a 100 megawatt AC grid interactive solar PV power project located in the state of Maharashtra. So the company has a clear execution timeline, stating that the entire project is scheduled to be completed within 12 months. So this win marks a major expansion of Vikran Engineering's footprint in the growing solar power EPC space. Next up, we have Waaree Energies, which has announced a significant boost to its order book, securing new contracts totaling 692 megawatts for the supply of solar modules. Now, this massive order win spans both domestic and international markets. So the company has secured 3 major domestic supply orders for solar modules consisting of 220 megawatts, 210 megawatts and 140 megawatts. Further strengthening its global presence, a subsidiary of the company has also received an additional order to supply 122 megawatts of the solar modules. Now on to the telecom and digital infrastructure sector. Realty Corporation of India has announced the cancellation of a major work order. So the order, which is valued at approximately 210 crore rupees, was cancelled by the client, the Bihar Education Project Council. So a Railtel, which is a Navratna PSU, disclosed to the exchanges that the cancellation was due to unavoidable reasons, though no further details were provided by the company. So this project was intended for the implementation of education quality enhancement under the PM Shri scheme. So the setback will be noted against the company's previously reported robust order book, which stood at 7,197 crore rupees as of June 2025. Now on to the infrastructure sector. GPT Infra Projects has successfully secured a major international contract. The order, valued at approximately 195 crore rupees, is for the detailed engineering, supply, installation, testing and also commissioning of a conveyor belt system. The contract was awarded in the Ivory Coast and is also part of the Phase 2 development works connecting SOCIM and TIPSP. So the project is scheduled for completion within a rapid 12-month execution period, and this international win is also expected to further strengthen the company's outstanding order book, which currently stands at 4,047.65 crore rupees. Next up, we have PTC Industries, which has hit a major milestone in India's defense manufacturing push. It has secured a landmark purchase order from the DRDO's Gas Turbine Research Establishment, or the GTRE. So the order is for the manufacturing of highly advanced single crystal ready-to-fit turbine blades, components that are critical to high performance and also aero engines, and a technology previously held by only a few global firms. Now, viewers, there's a big relief for Vodafone Idea today in the long-running AGR dues case. So the Supreme Court has adjourned the hearing, with the Chief Justice noting that the government is open to hearing the Vodafone Idea side. So Solicitor General Tushar Mehta said that any major move could actually affect the users and also the employees. So the centre will now reconsider this issue. SBI Life Insurance has delivered a strong Q2 performance, and they have beaten the estimates despite a dip in the profitability. So annual premium equivalent and also the value of new business grow, in double digits, while the net premium income jumps over 22%. So a better product mix and also higher non-par share lift the margins. So persistency ratios also improve, adding to the positive momentum. Next up, we have Kotak Mahindra Bank. It came out with its Q2 results during the weekend, and they have left the street underwhelmed. While the bank reported a sharp improvement in the asset quality and benefits from the lower slippages and also better recoveries, higher provisions dent the profit growth. So the microfinance segment continues to drag, and also the credit card book shrinks 14% year-on-year. Analysts remain cautious, citing limited room for a re-rating despite strong advances and also improved cost metrics. Reliance Industries has announced the launch of Reliance Enterprise Intelligence, which is a new AI-focused joint venture with Meta. So RIL will hold a 70% stake via its wholly owned subsidiary, while Meta will take 30%. So the JV plans to invest about $97 million to actually build and scale the enterprise AI solutions, with Meta bringing its cutting-edge research and also the Llama models to the table. Next up, we have Ola Electric, and its board has approved a fundraise of up to 1,500 crore rupees. So the company is planning to raise the amount via equity shares or convertible securities. While the reason hasn't been disclosed yet, the move actually comes amid a gross debt of 2,000 crore rupees and also a minimal capex plan for FY26. September's economic data is in. India's economy has gathered the pace in the second quarter of FY26 despite a volatile global backdrop. The Finance Ministry says the supply-side indicators remain strong, while reforms like the GST 2.0 and festive demand are driving the consumption and also the investment. While the IMF and RBI raising their growth forecast, the government remains optimistic. Now, in a major move to expand India's digital payments footprint, Paytm has now extended the UPI access to the non-resident Indians, that are the NRIs, allowing users abroad to actually link their international mobile numbers for UPI transactions. So this means that NRIs in countries like the US, UK, Canada, Australia, Singapore, and the UAE can now send and receive money via UPI. So without needing an Indian SIM card, the feature is available for those who hold NRE or the NRO accounts with Indian banks that support UPI. So the update comes as part of Paytm's ongoing efforts to enhance the cross-border payment accessibility and also expand the UPI adoption among Indians living overseas. Next up, we have SpiceJet, which is, gearing up for a major leap in its winter operations. The airline says that it will run 250 daily flights during its winter 2025 schedule, which is double the number of flights it has operated in the preceding summer season, and also a significant jump from the last winter. So the expansion comes as SpiceJet inducts around 19 leased aircrafts into its fleet, and also boosting the frequencies on major metro routes, and also opens new domestic and international connections, including non-stop daily flights to Phuket from Delhi and also Mumbai, and have added the connectivity to Rajasthan's top winter destinations. Singapore's refining margins have shot up sharply, jumping nearly 2,000% in just 10 days. So that's a massive turnaround, and could actually mean strong near-term gains for the Indian refiners like the BPCL, HPCL, and MRPL. So experts say that the spike comes as supply disruptions tighten the global diesel and gasoline markets, with sanctions on Russian fuel exports and also renewed geopolitical tensions adding the pressure for Indian refiners. Higher margins directly boost the profitability, especially for the standalone players that rely on the exports. Now in the jewelry space, P.N. Gadgil Jewelers has reported a strong festive season. Sales up 74% year on year. So gold has led the gains, followed by silver and diamonds. The company actually expects this momentum to continue via the wedding season, though the actual gold volumes have risen only about 10% as prices remain elevated. A strong export performance has given India's passenger vehicle industry a boost. According to Society of Indian Automobile Manufacturers data, exports in the April-September period have risen about 18% year-on-year, climbing to 4,45,884 units from 3,76,679 units last year. Now, leading the pack was Maruti Suzuki India, which has shipped 2,05,763 units abroad, which is a 40% jump compared to the same period last year. So utility vehicle exports have surged even faster, up 26% to 2,11,373 units, while van exports have jumped 36.5% to 5,230 units. Now on to some national news. Odisha and Andhra Pradesh are on high alert, with a powerful cyclone named Montha is barreling towards India's east coast, and also the government in Andhra Pradesh has already swung into action to protect the vulnerable communities. Coastal districts are facing heavy rains even now. Senior citizens, pregnant women and others in low-lying areas are being evacuated into the camps. Authorities say that schools will remain closed and all the relief mechanisms are on standby. With landfall expected imminently, residents are urged to stay alert and also follow the official instructions. The Madras High Court has directed the Tamil Nadu government to draw up and publish a standard operating procedure, that is the SOP, for political rallies within the next 10 days. The move comes in the wake of the tragic stampede at a rally in Karur that claimed 41 lives. So the court said that interim conditions for event permissions will remain in place until the formal guidelines are finalized, and it also invited suggestions from political parties as part of the process. Officials emphasized that the new SOPs must address the crowd control measures, also permissions for use of highways, basic amenities, and transparent timelines for the approval, all designed to prevent the future tragedies. Supreme Court has raised serious concerns over wave of digital arrest scams where fraudsters impersonate law enforcement or judicial agencies and also threaten people with arrest via phone or video call. The court said that many of these crimes originate from abroad and are widespread across India. It's now signaling its intent to direct the Central Bureau of Investigation, that is the CBI, to take up all such cases, and also has asked the states for details of FIRs and resources for handling these cyber crimes. The Uttarakhand government is rolling out a new green cess on vehicles entering from the other states as part of its push for cleaner travel and protection of the Himalayan ecosystem. Under the plan, non-Uttarakhand registered vehicles will face automatic deductions via their FASTag wallet when they cross the state borders. So thanks to the ANPR cameras monitoring entry points, exemptions include electric and CNG vehicles, two-wheelers, ambulances and other essential services vehicles. So rates vary by type of the vehicle, and also the policy is expected to launch from December 2025. On to some global news now. President Donald Trump has announced that he might sign the final deal for TikTok's US operations this Thursday. He stated that he has received provisional approval from the Chinese President Xi Jinping and is expected to meet him later this week in South Korea. So the agreement would transfer TikTok's US business to American investors, addressing national security concerns over user data access. Officials from rival neighbors Afghanistan and Pakistan are meeting in Istanbul for a third straight day after failing to clinch a lasting peace agreement to stabilize their volatile border. The lack of a breakthrough comes despite recent fragile ceasefire agreed to in Doha on October 19th. The truce had temporarily halted the deadliest violence the two nations have seen since the Taliban seized power in Kabul in 2021. Clashes that killed dozens of people. So now, as diplomatic efforts stall, US President Donald Trump has jumped into the mix, repeating his offer to personally mediate the conflict between the two South Asian nations. US President Donald Trump has also inked a flurry of major deals at the ASEAN summit in Kuala Lumpur, seeking to counter China's dominance. The US signed critical minerals and also trade agreements with 4 key Southeast Asian partners. The pacts, including deals with Malaysia, Cambodia, and also Thailand, aim to secure crucial supply chains and also chip away at trade imbalances, particularly following China's tighter export curbs on the rare earth minerals. With that, viewers, it's a wrap on this edition of Market Express, but stay tuned to NDTV Profit for more news and updates.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer, and also a top Indian pro at the moment. The one administrator who's doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot. Thank you very much. You're starting golf. We want to thank you. That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम के आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
अरे और रहमान
Nifty Sensex end near day's high with Nifty closing a whisk away from 26,000. Sensex jumps over 600 points. Most sectors finished the day in the green. PSU banks, oil and gas and realty lead the gains. Defense, media and pharma were the top sectoral losers. Government approves 7 electronic component manufacturing scheme plants including Keynes, SRF, Sirma Strategic and Ascent Circuits. Investments of 5,532 crore rupees is expected for PCBs, laminates and camera modules and polypropylene films. Some relief for Vodafone Idea as Supreme Court allows Centre to reconsider the telecom carriers' AGR dues. CGI Gawai says any decision will have a direct bearing on Vodafone Idea's 20 crore customers. Larsen & Toubro is set to seal a $400 million deal with Maersk for shipbuilding and repair works in India. Orders to be executed from Tamil Nadu plant. This is an NDTV Profit exclusive. India Maritime Week 2025 kicks off with 500 exhibitors and 200 global speakers. NDTV Profit speaks to Mazagon Dock, Forge and LLT Precision, who showcase their defense equipments at the event. Lenskart plans to launch its IPO on the 31st of October with an aim to raise 7,278 crore rupees at a valuation of nearly 70,000 crore rupees. The price band is set at 382 to 402 rupees per share. Investor Radhakishan Damani commits a pre-IPO investment of 90 crore rupees. The India-EU FTA talks enter final leg as year-end deadline looms. Commerce Minister Piyush Goyal visits Brussels to meet his counterpart, while the EU delegation arrives in New Delhi to hold ministerial and parliamentary level talks. Finance Ministry says India's economy gained momentum in the second quarter of FY26. Growth outlook remains strong despite global uncertainty. Both IMF and RBI hiked their growth forecasts. Hello and welcome. Very good evening. This is Profit 360 on NDTV Profit and I'm your host Malika Mishra. Along the next half an hour of this show, we'll bring you the latest on markets as well as national and international news. So follow along. Let's begin with checking how the markets performed today. Benchmark indices traded higher today, rebounding from last Friday's pause on a 6-session winning streak. While Nifty closed above the 25,900 mark, the Sensex finished above 84,600 odd levels. The broader market sentiment appeared positive, with most sectors advancing in trade. PSU banks, in fact, emerged as a top performer with gains led by Bank of India and Canara Bank. In contrast, Nifty Media was a top laggard, with Nazara Tech and Zee Entertainment posting the largest losses in that index. My colleague Puneet now joins us with a detailed market roundup of the day.
Well, it was a strong end to the Nifty 50 today, with the benchmark indices closing above the 25,900 level. It's a key one to watch because on Friday we slipped below 26,000 with rigor, to say the least. And while we were unable to maintain 26,000 as a key level on the Nifty 50, over 178 point gain on the Nifty 50 will continue and augur well for the market going into tomorrow's session. When you look at some of the key winners, SBI Life as well as something like a Grasim led the gains today for the Nifty 50. We also saw Reliance as well as Bharti Airtel were major gainers for the Nifty 50 in trade today as well. But overall, a positive session to say the least. When you look at the broader markets, both the mid cap and the small cap gained and were ended in the green as well today. We saw that overall participation also coming in for the broader markets in today's trading session, a trend that's largely been on the opposite side to say the least. When you look at some of the other key winners, we mentioned that in the mid cap space, Bank of India as well as Bharti Hexacom were one of the key winners, while in the small cap space, we saw the IT players starting to get a lot of traction, and that was led by something like e-clerks. Post its Q2 results, a really strong set of numbers which propelled the stock up almost 4% in trade today. Similarly, a positive trend was seen in something like First Source Solutions Limited as well. When you look at the broader markets in terms of sectoral allocation, something like a PSU Bank, something like the Nifty Auto were also in focus. The PSU Bank emerged as the top gainer in terms of the sectoral index. Bank of India as well as Canara Bank were some of the key gainers in that index, while the Nifty Media emerged as the top sectoral losers. That was led by Z Media amongst others. We also saw the Nifty Realty gain for the third day, while something like a Nifty Pharma has actually fallen for the third consecutive day as well. So we are seeing mixed trends overall, but it's going to be a very important week for the market. We are seeing a lot of global factors like the Fed meet, as well as US and China also. The president is going to be meeting this week on the 30th in the ASEAN summit. So multiple key triggers in terms of the global markets will have an impact on the Nifty 50. But largely going into tomorrow's session, it is an earnings heavy week. So there will be multiple key factors that will pay out for the markets. But overall, a positive session to say the least, and a lot more action to be seen tomorrow.
Thanks for that market wrap, Puneet. Now let's take a look at a microscopic view on Coforge, especially after the company posted in-line numbers for its second quarter last week. In our conversation with the company, it clarified that its deal win momentum remains strong. The CEO and executive director of Coforge stated that the recent $500 million win is just the beginning, with more such deals expected in the pipeline. In fact, Sudhir Singh broke down the numbers of Q2 FY26 as well. Listen in.
Well, we've been at about 500 plus for a few quarters now. We believe $500 plus million should be more or less, obviously factoring in the occasional vagaries up and down, should be more or less the baseline that we should operate at for the foreseeable future. We feel very good about the order intake number because the large deal velocity and the large deal median size of the firm has been going up almost every quarter and of course every year over the past few years and quarters. So at this point in time, 500 we believe, and this was all organic, is a good minimum baseline for Coforge to aim for going forward.
Moving on, another day, another hit job falls flat. The Washington Post claimed that the Indian government pressured LIC to invest up to $3.9 billion in the Adani Group, a charge LIC now calls completely false and baseless. From multi-thousand crore bond deals to equity stakes, LIC says its decisions are independent, profitable and fully above board. My colleague Nisha Podar now joins us with a detailed report on the same story.
Let's look at the facts and publicly available data that is there to really see whether Washington Post's allegations have been hold true or not. First of all, they have said that Government of India has pressurized LIC's investment decisions in Adani Group and especially Adani Ports, which required over $500 million for repaying some bond or debt dues. Now, first of all, LIC has proactively refuted all these claims by Washington Post and also stated that their exposure to Adani firms is 36,000 crores, which is under 1% of their total AUM. The first big allegation of over $500 million of bond issue refinancing, that's what Washington Post has said, that it is for refinancing some earlier debt. And to that, the publicly available data suggests that Adani Ports had utilized that particular money for really buying back the bonds which were maturing in 2027 and 2029. Also important to note that LIC is receiving an additional profit with 1.26% of spread over 15 years GSEC. So that is a profitable investment coming in for LIC by way of this investment in Adani Group. Group. Also to look at the big question that Washington Post really asked is Adani dependent on LIC for its fundraise and funding requirements? Well, debt from LIC is less than 3% of Adani's total debt. 50% of Adani's debt is from overseas investors. So that particular point gets refuted here. Other large investments that have been done in LIC, and is LIC really the sole investor? That also is one of the claims by Washington Post on Adani in this particular bond issuance. So is that of its investment decisions or general trends of decision? That is a big question to be asked. And here again, we have found out that LIC has been making or being the sole or the largest investor in many of the conglomerates and large companies in India, and the list is right here. Now, the second allegation also is of other international bankers and institutional investors, whether or not they invest in Adani Group. And there again, the fact suggests, and we have many instances in this particular year where Adani has received investments from many marquee foreign investors. So looking at the overall size of LIC's investments, and equity issuance, remember, could be just market trade by LIC by way of even corporate action and equity action of Adani Group, which has unlocked value in several of its verticals, starting from Adani Enterprises way back. So there again, by way of that, LIC could have held larger stake in many of the companies in LIC. But when it comes to large investments, top 10 investments of LIC in the large conglomerates or businesses in India, Adani Group does not fall in that. So a lot of these Washington Post's allegations fall flat when we look at the facts which are publicly available data on the listed companies of Adani Group.
Thanks for that detailed explanation, Nisha. Meanwhile, the news of Lenskart IPO viewers has been buzzing in the primary market. In this context, CEO and co-founder of Lenskart, Piyush Bansal, spoke about how he grew up admiring Radhakishan Damani but never really thought of approaching him for funding. He also commented on how Damani's investment into Lenskart is poised to be a priceless learning experience. Listen in.
Me and my co-founder Amit, we have had such a huge respect for Mr. Damani. I mean, we have grown up watching D-Mart stores, right? And you'll always find a Lenskart store near a D-Mart store. I'm telling you that little secret. And we have stood in that D-Mart store from morning to evening. And, when we met him just as an admirer, not necessarily to raise any money or request him to be part of the IPO, but the conversation hit off really well. And I think, and it was an honor that Mr. Damani decided to be part of our journey. That's all I can say. But yeah, I don't know if it is of prize validation or anything, but yeah, it's a huge honor for us, and there is so much to learn from him. I mean, he's definitely created. D-Mart is something that we always look up to.
And moving on, the government has approved 7 new electronic component manufacturing plants, including projects by Keynes, SRF, Sirma Strategic and Ascent Circuits. These initiatives are expected to bring in investments worth 5,532 crore rupees, focusing on the production of PCBs, laminates, camera modules and polypropylene films. Let's hear from Ashwini Vaishnav as he shares insights on these approved projects and how India aims to meet the growing demand for electronic components.
इलेक्ट्रॉनिक्स कंपोनेंट मैन्युफैक्चरिंग के 7 प्लांट्स आज अप्रूव हुए हैं, जिसमें मल्टी लेयर पीसीबीज, ये एक मल्टी लेयर पीसीबी है इस तरह की, ये जैसे इसमें 3 लेयर्स हैं टोटल जो कि आपस में इंटरकनेक्टेड हैं. मल्टी लेयर पीसीबीज बनेगी, हाई डेंसिटी इंटरकनेक्ट, आप देखेंगे इसमें कितनी हाई डेंसिटी के सर्किट बनता है. ये हाई डेंसिटी इंटरकनेक्ट का, कॉपर लेमिनेट का, ये कॉपर लेमिनेटेड अल्ट्रा प्योर होता है जो कि पीसीबीज में काम में आता है. फिर कैमरा मॉड्यूल कंप्लीट जो कि कई चीज़ों में काम में आता है, इलेक्ट्रॉनिक्स के कई आइटम्स में कैमरा मॉड्यूल्स काम आता है. और ये कैपेसिटर है, इसके अंदर की जो पॉली प्रोपिलीन फिल्म होती है वो पॉली प्रोपिलीन फिल्म बनने लगेगी भारत में. मल्टीलेयर पीसीबी के प्लांट से करीब भारत की जो रिक्वायरमेंट है 20%, 20% ऑफ दैट डिमांड विल बी met through this entire production. Camera module में around 15% of our demand will be met by domestic production, and laminate 100% of our demand will be met by Indian plant. अभी तक सारा import करते थे. Polypropylene film में अभी भी import करते हैं. उसका भी काफ़ी बड़ी मात्रा में इस प्लांट से उसका भारत की डिमांड मीट होगी.
In a relief to Vodafone Idea, the Supreme Court has allowed the government to reconsider its AGR dues issue. Chief Justice B.R. Gavai said any decision on this issue will have a direct bearing on the beleaguered company's 20 crore customers. He in fact cleared that he sees no problem in the centre reconsidering the situation and taking appropriate steps. It's important to note that as of now, the government controls 49% stake in Vodafone. But for more details on what's brewing behind the scenes, let's take a look at this report sent by my colleague Danish Anand.
Well, in a big relief to Vodafone Idea, the Supreme Court today permitted the central government to consider Vodafone Idea's viewpoints on the overall AGR dues. Let me tell you that Vodafone Idea had reached to the Supreme Court last month, in which it highlighted that how back-to-back fresh AGR orders are creating a huge impact on companies' financials, and moreover, the fresh AGR demand that DOT had furnished to Vodafone Idea, it amounts to somewhere around 9,400 crores. And considering the financial situation of the company, Vodafone Idea has reached to the Supreme Court seeking a relief on interest penalty and interest on penalty. But in today's hearing, which finally happened after 3 deferred hearings, SG Tushar Mehta, who was representing the government, he said that considering that how big Vodafone Idea is, and it has almost 20 crore users and it has thousands of employees, so for their betterment, they have thought that the government will be considering some kind of proposal. And later on, we saw SG Tushar Mehta handing over a document which is a proposal from the central government side to the Supreme Court. Mughal Rohatgi, who was representing Vodafone Idea, he agreed to this offer and he obliged to Chief Justice of India that the top court is finally considering Vodafone Idea's situation right now. So all in all, if we see, it is a big relief for Vodafone Idea, as now the ball is between the Department of Telecommunications and Vodafone Idea, and it is expected that in the coming few days the government will be giving a proposal to Vodafone Idea, and then we will come to know that what sort of money will Vodafone Idea will have to finally pay to the central government.
Let's now shift focus to one of the largest maritime gathering here in Mumbai, the India Maritime Week 2025. Now, this edition is themed Uniting Oceans, One Maritime Vision, and is organized by the Ministry of Ports, Shipping and Waterways in partnership with the Indian Ports Association. Highlighting the gravity of the Maritime Summit, Home Minister Amit Shah said about 2/3 of the world's trade and 90% of India's business occurs through the Indo-Pacific region. Emphasizing on India's preparedness to connect its maritime strength with the rest of the world, the minister said India targets to be among the top 5 shipbuilders in the world. Let's listen in to a brief portion from his address at the summit.
हमने लक्ष्य रखा है कि दुनिया में शिप बिल्डिंग इंडस्ट्री में हम टॉप 5 में भारत होगा। नए मेगा और डीप ड्राफ्ट पोर्ट्स का निर्माण हम कर रहे हैं। पोर्ट डीलिंग में 10,000 मिलियन मैट्रिक टन प्रति वर्ष का हमने लक्ष्य रखा है। पोर्ट ट्रांसपोर्ट को पूरी तरह से डिजिटाइज कर लिया गया है और इसके साथ ही भारत, इंडिया, मिडल ईस्ट, यूरोप इकोनॉमिक कॉरिडोर, ईस्टर्न मैरीटाइम कॉरिडोर, नॉर्थ साउथ ट्रांसपोर्ट कॉरिडोर जैसे कनेक्टिविटी प्रोजेक्ट से भी अब जुड़ चुका है।
Let's now get you a glimpse of some stalls our reporters visited at the Maritime Summit today. First up, my colleague Charu hit the mic at Anand S. He's a representative of Kalyani Strategic Systems at the summit, which is the defense wing of Bharat Forge. In their conversation, Anand showed us their flagship product, that is Mine Reconnaissance underwater vehicle that can detect underwater mines with its high-end technology. Let's take a look at this report.
Can you just explain to our viewers this flagship product of yours? What is this? What it does?
So this is Mine Reconnaissance Vehicle. It's an AUV. So this actually detects if there is an underwater mine, and then it can clear the ship pathway for the ships to come. So, and we already have this product in service with the Indian Navy, and this is one of our flagship products. So coming to these two products, this is called EUT, Expendable Autonomous and Expendable Underwater Target, and that is a mobile target emulator, MTE. These both are for ASW, which is anti-submarine warfare. And this means it acts as a decoy for incoming torpedo, which is an underwater missile. So your ship can deviate and this only will get struck.
My colleague Charu also covered the stall of Mazagon Dock shipbuilders. There she spoke to Binay Kumar Sinha. He's a general manager corporate planning of the company. In their conversation, he spoke in detail on the efficiency of its three key products, which are Vishakhapatnam class missile destroyer, Scorpene submarine P-75, and the ships being built under Project 17A. Let's take a look at a brief portion of their chat.
This company journey started in 1774, incorporated in 1930 and taken over by Government of India in 1960. So far, after taking over by Government of India, we have built more than 806 vessels, which include 31 capital warships and 8 submarines of 2 different types. This is one of the flagship platform for a destroyer, which can be built only in one shipyard, MDL. Destroyer and conventional submarine. These 2 model is built by Mazagon, and that can be built only by Mazagon.
So you have some patented technology over it, or you have the tender to make these products solely?
No, it's a customized product as per the Navy requirement. What Navy wants, they give the design, and we as a shipyard procure the item, integrate it and deliver it. And finally it is getting commissioned and serving the nation.
सर एक ये प्रोडक्ट बनाने में आपको कितना साल का वक्त लगता होगा?
Starting first vessel is taking more than 6 years, and subsequently every year we are giving. Like this Visakhapatnam class is having 4 vessels, so we have delivered consequently every 1 year. Every 1 year, once.
And कितने आपने बना दिए हैं already?
Visakhapatnam class we have built 4 and all delivered to Indian Navy. Even we have completed guarantee period and last ship guarantee period we are serving.
India and the European Union are in the last lap of finalizing a trade deal ahead of the year-end deadline. Negotiation teams from both the regions are about to carry out discussions with their respective counterparts. Let's go across to our senior correspondent Rishabh Bhatnagar for more. Rishabh, what's the latest that you're picking up on this trade deal?
Right, yet another very key free trade agreement that India is about to sign is the European Union Free Trade Agreement, and this is something that both sides are working towards. Remember, the deadline for this was the year end, and talks have entered the final leg as we're now just about to enter November. So just about a couple of months left. And what we're seeing is that negotiations are picking up on both ends. You have the Union Minister Piyush Goyal, who is in Brussels in Belgium, meeting his counterpart Maroš Šefčovič. And what they will be talking about is, of course, giving all these trade negotiations. About 14 rounds have happened between India and the EU. Now what is required is more political guidance, more political direction, a strategic impetus that both these leaders will be providing. While that's happening in Brussels, you also have very key members of the European Trade Committee come into Delhi and meet a lot of parliamentary leaders. You'll have diplomatic meetings happen there, and also their meetings with industry associations like the Confederation of Indian Industry. So you have two-way visits that are happening. Remember, of course, earlier this year, we heard that the final negotiations that have entered, this will be the final leg that these negotiations are entering. Remember, only a couple of months left till year end. What we're seeing is that there are certain pending issues around market access, around non-tariff measures, as well as certain regulatory cooperation issues. Those will be a part of the discussions that will happen over the next couple of days, and that is something that we will have our eyes peeled on.
Rishabh, stay with us. According to Finance Ministry's September Economic Review, India's growth has strengthened amid global uncertainty. What does the report say exactly? Could you take us through the key highlights?
right? Some few interesting insights that have come in with regards to the Indian economy, especially in the September monthly economic report. A few key headlines that we've picked up is the fact that the economy has remained resilient in Q2 of the current financial year as well. That is something that the monthly economic report talks about. What we're also seeing is that in the FY26 for the overall year as well, the resilience looks good. It looks set that the economy will be growing and not degrowing in the current financial year. What we're also picking up is the fact that the reforms that we're seeing in the economy, like the GST reforms that came in with the rate rationalization, slabs coming down, as well as the rates itself also coming down, those are the sort of reforms that will continue to support growth and also help in the face of various external factors that are upsetting the economy, such as the US tariffs. And it is reforms like the GST reforms will help cushion the impact of such external factors that are impacting the economy. What we're also picking up is the fact that there are certain global uncertainties. They will continue to pose downside risks. But what is interesting to note is that the services sector, that remains very strong. The industry itself is maintaining its growth. What we're seeing is the fact that you had the IMF also come up and they also upped India's forecast to about 6.6%. RBI sees it at roughly 6.8% GDP growth. And what we're seeing is that for the overall year itself, for FY26, that the Indian economy will grow. So all positive signs coming in, even in the face of geopolitical as well as global uncertainties coming India's way.
Well, on that positive note, it's the end of this edition of Profit 360. Do stay tuned to NDTV Profit for more news and updates.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who's doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot. Thank you very much. You're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है.
Hello and welcome to KYC. I am Sharad Dubey and with me is Anushi Vakharia. And the company on KYC's radar today is Prostam Infosystem. This company was of course recently listed. Not much data regarding the company, but yes, we have seen the overall research happening and there's a lot of questions regarding the stock itself. Recently the stock was listed. Anushi, I think it was the June month when the stock was listed, right?
Around a 19 to 20% of a listing premium is what we had seen that time. Yeah.
Well, the question remains is why are we actually getting this company?
Right.
There are key concerns, of course, for the investors and maybe the prospective investors. The first question is how are the order book trends or the client confidence looking like? That seems a decent question to start with, but then of course as we peel through the onions, there are some questions which will be raising some eyebrows. How will the company stand against its MNC giants? And of course, we'll be discussing about the company as well going ahead. But the new foray, battery energy storage system, that's like the mantra of the entire industry right now.
All of these companies. Everybody's
talking
everybody's
about going into this
space.
Yes. So let's see how much it's truth and how much it's executable. Higher debt levels. After IPO also the debt levels are at the higher levels. So we need to ask where's the progress of this debt reduction. So these are some key questions I think which we will be actually looking out for. And of course lastly, what is the actual motto of the company? Company is doing 2 or 3 announcements. Where does the company actually stand? But let's just give our viewers a flavor of what the company is all about. So of course the company, they had run advanced UPS systems, lithium ion battery and end user computing. The numbers, the jargon, it's very technical. We'll try to decode it for our viewers in a simpler manner, and this is a big announcements coming in. They have around 750 customers, 1 lakh installation and 3 operating manufacturing facilities, and maybe 1 facility will be coming online in some months as well. Key competitors, these are very big global names, Anushi. Schneider Electric, Vertiv, Delta Power Solutions, their size is also very huge. But there are certain questions. I think I would like to just ask, what is end user computing? A lot of viewers are asking me, Sharad, what is it, this company all about? There are so many new things coming. Can you just decode that jargon?
Right. So, we've already spoken about the power side of the business. This is another area that the company has been increasing its contribution to. It's around a 94 crore of a market that we are looking at in comparison with about 2 crore last year. What it essentially does, it delivers end-to-end IT hardware solutions. So this includes all your notebooks or desktops or all-in-one systems as well. So it's basically reading side of a setup that we are looking at. So that is on end user computing. But just a little bit about the IPO as well, if you're talking about that. We already spoke about it, that they marked an entry in June 25 and they came out with a total issue size of about 168 crore. This is an entirely fresh issue that we had seen. Proceeds to be utilized towards funding working capital requirements of the business, along with that for repayment of debt also. Now that amounted to something around 18 crore or so. And of course, the other would be to look for more inorganic growth opportunities as well. So we'll be quizzing the management about the last 2 questions, especially about the debt repayment, also about how they have deployed these IPO funds so far. But let's take a look at the FY25 business mix as well. So if we are just drawing that on board, manufacturing power solution products, that makes up to 35% of the mix. Third-party power solutions and other products also 32% of mix coming from here, while solar EPC contracts and value-added services see about a 6% of contribution. Now with most of their order book shifting towards the BESS side of the business, it's interesting how this would change going forward, right Sharad?
Correct. And if you look at it, the numbers, if you are adding up and if you're thinking it's 100%, it's not 100% because other services are also there, other revenue segments are also there. That's why it has been put up. So we are seeing a variety of businesses the company is doing under one head. Now, of course, the question arises is the manufacturing plants. I would just like to, go faster. Pune plant, they are having a UPS system, while they have a second plant for the solar hybrid inverters. And lastly, there is a lithium ion battery pack as well. So futuristic manufacturing plants, 3 are operational, 1 is in the offing. But let's get back to our show. The rating parameters, Anushi, that's the most important thing which our viewers actually look for. And if you look at it, we are having income statement, balance sheet, cash flow, return ratio, shareholding, street trade, valuation, and outlook. And out of these 8 parameters, we will be giving the numbers so that you get a clear picture, a 360-degree analysis of the company, and later on the management will also be coming in. So we start firstly, Anushi, what do you like to say about the income statement? What are your views on it? They look prima facie decent?
Yeah, so what we are looking at is an overall decent set of numbers in terms of where the revenue growth is concerned. It's a 26% of a CAGR growth that we are looking at over the last FY22 to 25. If you are taking those fiscal years in account, while margins also in these particular fiscal years have ranged between that 12 to 14% of mark or so, the question would be, what's the kind of sustainability that we'll see in terms of the margin profile, considering the first quarter, we did see a dip in terms of how the margins have panned out. Net profit, a 36% of a CAGR growth that we're looking at. So considering the previous fiscal's performance, we've given this one a thumbs up, right?
Well, yes, but of a balance sheet, I do have some apprehensions, Anushi. Especially if you look at the debt numbers, that number has not reduced. And of course, we will be quizzing the management is after getting the IPO proceeds, when will the debt start going down? What's the timeline? But the numbers have spiked up. It's almost up 50%, 67 crores of borrowings coming in. Not much to look at the book value, but the cash and bank, that's an area of concern for me. If you're looking at a big size, you need a good, decent cash and bank balance as well. It's a high working capital intensive business. More loans will be coming in, but the liquidity ratios need to shore up. It's such a big size of a company. You're just having 2 crore cash and bank balance. So that raises some questions as well. From my side, Anushi, it's a neutral.
Right. So for cash flow, we have, accounting for all that we spoke about, we've given cash flow a thumbs down, because if we just see the previous 3 fiscals, a negative cash flow is what we are looking at. Now the business wants to utilize towards, is expanding in terms of how they want to utilize their working capital requirements. So if there is improvement in terms of the management commentary on that, that is something that we should be watching out for. But considering the EBITDA and the net cash flows also, it's almost negligible that we are seeing. So far, for now, we've given cash flows a thumbs down on that basis.
Well, of course, so it's basically even Steven still now. We look at the financial statements. But return ratios, Anushi, that's on the higher side. I would like to just point out the ROC numbers. That's for FY23, it was 34%. It's 28% and 25%. So it's kind of actually going down. Now, of course, we will be quizzing the management. Is there an extra balance sheet pressure? Whenever these numbers come, there is a pressure on balance sheet, whether it's debt or it's over expansion. That is something to look at. ROE numbers also, you look at it. It was 40%, 32%. And now you see there is a slight downtick of 30-odd%. Net, the return ratios, however, still, if you look at the industry average, it's still on the higher side. And let's give some time to the company as well. It's just, just been June is the month which Anushi was talking about when it was the listing. So we should need a much more better data to actually understand and give us our ratings. But initially, for the time being in the industry itself, whatever limited data we have given a thumbs up here. Anushi, what would be there for the shareholding patterns? I know it's just 2 quarters of actually seeing the data, but something is there, right?
Yeah, before I just go to shareholding, a quick point about return ratios is also that we are looking at this dilution because of increase in the equity capital as well. Now, since there was IPO in picture, so the base has increased. So from now on, how the ratios would be sustained is something that we should be looking out for. Because if you just look at prima facie, the 25% to 30% number, that seems on the healthier side, as Charlotte just spoke about, that versus the industry average. But quickly coming to the shareholding part, we just have 2 quarters of information as of now. While promoter stake remains healthy at 73% odd level, FII and DII stake has gone down considerably from 4% to almost 1% of a ratio is what we are looking for FIIs, while DIIs have also offloaded their 2% stake to about just 0.7% now, while the public shareholding has increased to about 26%. So more time awaited for this particular piece of information going forward, right?
Well, yes, Anushi, but the most alarming part which I saw is both the institutions, their stake has come down below the 1% mark. That means it's technically an exit. And of course, as we go forward, there will be a lot of months where lock-ins will be coming in.
Right.
So we'll have more of these exits likely. And if that happens, we see the retail position going up. And whenever there's a lot of retail position going up, it becomes a distribution kind of a move. And that is why we are I think for shareholding, you have given a down, thumbs down as well. But moving on, the second last parameter to focus on, that's the street cred. Anushi was speaking about the recent IPO performance. And if you look at the company itself, on listing day itself, it came at 120 rupees. That's more than 10-15% odd listing gains as well. Currently, since listing, the stock is up 56% and there has been a sustained buying and support. Anushi is coming from the retail segment. That's a very interesting thing. So net, I would give a neutral rating on this because the timeline is not there. So that's why I would suggest let's keep it neutral for the company. But there is a last parameter which we look at. What would that be?
Well, let's talk about valuations. Is this the right time to buy or enter? That's the question we should be asking. Now, if you just look at the price multiple, 25 times versus its peer, which is Servotech Renewable that we are looking at, there's a vast difference that we are looking at, 25 times versus 84 times. Now, what is the kind of growth picture, the cash flows, the debt profile, all of these have to be accounted before we just look at this one multiple in particular. But for this metric, we've given it a thumbs up, right, Sharad?
Well, correct. And I think let's revise the entire report card. What our special show is there, what our rating numbers are there. If you could just get our ratings in income statement, we had given 1 positive, it was balance sheet largely neutral, cash flow on the negative side, we've given a thumbs up for return ratios, and going ahead, let's look at the shareholding portion, that's on the negative side. Street cred largely neutral, but valuations still favorable as compared to its peer. Outlook largely you could say it's neutral, and I'd just like to point out the new segments they are entering, that is something Street will be watching out for. Currently the KYC final rating, that comes in at 4.5 out of 8. So the company needs to prove more, they need more time, and of course they are doing so many things at a single time. So of course the time will say, and how the prices move. But overall right now, Anushi, the retail is holding up the stock.
Right. Well, so that is what we are seeing for Prostam right now. But with that, let's welcome in the management as well. Ram Agarwal, the CEO and whole-time director, is with us to talk to us about the results that we are looking at. Thank you so much for taking out the time to speak to NDTV Profit. I just want to start off the conversation. You recently had your IPO, you had the proceeds. Now, what we are seeing is that in the last 3 fiscals, there have been negative cash flows. Will this improve from this FY26 period onwards? My first question is regarding that.
Yeah, namaskar. See, first of all, thanks for having me here. I would like to say that our negative cash flow improves in last 1 or 2 financial year, and it will substantially come down by next financial year because we are working hard on it, and it will definitely improve further.
Okay, so just want to take this in account that what is the kind of debt picture that we are looking at, because if we just see the FY24 to 25 value, we've in fact looked at an increase in terms of where the debt number is concerned. So just want to understand your overall plans for debt reduction. You already had a plan of around 18 crore of debt reduction in your IPO proceeds as well. So how have you deployed those IPO funds? Can you give us an update on all these key parameters?
See, our debt ratio has come down substantially. As on today, our cash fund-based limit used is only 7 to 8 CR. Our major fund debt is used against non-fund-based, that is bank guarantee. It is around 75 CR as on date. Whatever IPO received we have used, we have paid 18 CR for one term loan debt, and all other fund has been used for our regular cash flow, and some has been parked for using against this acquisition and the Capex investment.
Well, that's pretty interesting. You mentioned the debt and, of course, the overall, interest rate costs and how things will move ahead. Anushi had asked. But one more question remains is, and your company, largely the revenue numbers, when we and Anushi were checking the investor presentation, that was ranging between 80 to 85%. So the company has a huge exposure to the government segment. Now there are problems of execution comes, payment comes. So where is company positions in that, and how is company actually helping itself out, or safeguarding itself when it comes to the B2G orders?
See, I'll tell you one thing. Our product is a last mile product, is a Capex product. So we generally bill at the end of the project. Generally it is happened at the end of quarter, end of the financial year. So in the balance sheet, the number goes up immediately. But if you see the last 2-3 quarters, the collection is happening. Yes, there is some delay in the execution, in the collection of the government, but there is no any bad debt, first. Secondly, going further, we are working hard on increasing our business portfolio, and if in this current financial year you will see substantially rise in the private sector. We are focusing more on the product side, where to increase on B2B business in the current financial year, and overall the number at the end of the quarter, at the end of financial year, you will see a good change in the proportion of the breakup of the sales.
Ram sir, if you could just give us the breakup, roughly I think it's 15%. So will that touch around 25 to 30% at the end of this year? If you could just quantify.
Yes. Minimum. It should be minimum. I can't give the exact number, but it will be
range will be fine.
Above.
20% above. Fair enough.
Agarwal, just want to get, because with this overall capacity additions that you have in plan, what's the kind of outlook that we should be building for FY26 in terms of top line as well as margins? 26% of a CAGR is what we've seen in the previous 3 years. Is that expected to sustain, or do you see a further uptick also with the addition of more of these segments going forward?
I'll tell you, I can't give the actual numbers to you. I have some limitation. But if you see our last 3-4 year growth and our top line and bottom line, if you compare those for last 3 to 4 years, I can say you that next 2 to 3 years will be much, much better. We are working very closely on the reverse integration in our manufacturing facility, and lot of new product is coming up in the UPS and inverter, which will add up a new revenue model, new revenue segment for us. So it will overall increase in the size of the manufacturing capability as well as the manufacturing product sales in our overall portfolio.
Okay, and what about the margin profile? Because, in the previous 3 fiscals, it's been in the range of 12 to 14%. But in the first quarter, it came down to 7%. So just want to understand in terms of the shift in terms of margins.
Quarter-wise, I can't comment. There are many factors where quarter-wise I can't justify. But when you compare the financial year number, it will be totally different. And I'm with very confidence, I can tell you that it will be better than last year.
Okay.
That's a pretty interesting focus on that. But of course, main thing which of course the investors have been asking us is to ask about the order book. So suppose this order book status, what's the actual breakup like coming in, to give us more clarity? And also before that, can you just explain us what this end user competing segment means? There seems kind of in the investor community that what this business is actually there, because significantly now the orders have started coming in this segment. So could you first, just for our sake of our viewers, just define this segment, what it actually is, and then we'll go ahead with the order book story.
See, end user computing is nothing but an e-governance project of the state and central government, where we have our own product like power conditioning equipment. We call it UPS, inverter, whatever. So earlier we used to quote to the partner where they bid for the project, and in some cases where we are qualifying, we are justifying our presence, we are bidding directly with in few projects just to gain credential, and it becomes a business factor for us in the future. Last year, if you see, we have done one end user computing project where our margin was very low. But because of that, we are getting qualified for a large project in the current financial year where our bottom line is fairly good. I can't disclose that. It will come up in the financial year number, but it is much, much better than last year. So it is just to add on a vertical. We are not going out of our domain, that is power sector. Here, UPS plays a key role in this IT computing sector. So we are taking the other product and doing the integration and giving a one solution to the government where we are leveraging our infrastructure, our service network, our capability, everything. It's not just a supply, it's a commissioning, installation, commissioning, and the end-use service for the 3 to 5 years. It gives us revenue for 5 years also, as an AMC.
So this new segment gives you a revenue visibility of 3 to 5 years. Viewers, please note this because a lot of queries had come for this business itself. But order book, that's what our last discussion was, Ram sir. And order book stands at roughly 284 odd crore rupees and annual status is roughly 11 crores. Now these new order inflows, what is the guidance looking like? And if you could just break it down by sector to sector.
If you actual number as on date, I'll give actual numbers on date.
Sure.
Actual number order in hand is around close to 1100 crore, where we are likely to bill minimum 300 crore in this financial year, minimum. And out of this, apart from this 1100 crore, we are having our bidding, which is under evaluation, is close to 1000 crore. So our numbers are very pretty on better side, on upward side, and at the end of the financial year, we are very hopeful we will have better top line and bottom line compared to last 3 financial year.
Okay, so that's on the order book that we are looking at. Now coming to the main segment, that's the battery energy storage system. A lot of the industry players are, increasing their focus towards this particular segment. Want to firstly understand what is the competition scenario like? You're already setting up huge capacity plans in Haryana as well. So firstly on the competition side of it, and second, when will this start, contributing to the revenue? If you can help us with the utilization levels and that as well.
I will discuss BESS as a overall. BESS in India is a totally a new subject for everybody. Anybody doing a strong claim, I can't comment on that, but it is a new subject for everybody in the market. Even for us, it's a new, but being as a power industry, as an electronic industry, we are into for last almost close to 20 years. So as a power electronics manufacturer, we have a better stand in this BESS overall. So in our Haryana manufacturing plant, we are focusing on manufacturing 1.2 gigawatt capacity. If you talk of the business, in a business case, how much business we can do from the manufacturing facility, there's a possibility of doing 1200 crore billing from this Haryana facility once we start using the facility more than 50% or close to, you can say, 80%.
Well, please continue, sir. Yeah.
This is what we are targeting from our Haryana plant as an OEM of the BESS. Secondly, the project what we are having in our hand, that is Bihar government and the Karnataka government. This is under the active processing. We are in the designing and all agreement, everything is done. And we are targeting by next financial year, it will be commissioned and our revenue will start coming in.
Ram sir, I just have a follow-up question on the BESS segment. The revenue will start coming in, say, in the next 18 to 24 months if the plant gets commissioned in 12 months. So it's a wait period of 24 to 36 months?
No. We have mandate of doing within 18 months, but we have a target self-target to do it within 12 months.
Okay, so there's an internal target for BESS. Okay, sir, this is a strategic question for you because I have been reading about your peers. Your peers are basically global players. Schneider is also there. All these players are there. But what sets you apart? Especially the question I'm asking you is because you're an Indian company, you're an inborn company here. Credentials at times matter also. You are getting almost 90% of your orders only from the government itself. Private market space, when you go, there will be more competition from the foreign majors. How will you differentiate yourself?
Tell you. There are 2 types of sectors in the market in India, Tier 1, Tier 2. I term this slide as a Tier 1. We term our Indian companies in Tier 2 sector. and we are among the top 3 in the tier 2 sector. As an Indian company, as a company size, we are too small compared to this giant. But as a product, we are competing, we are capable of competing with them. We are matching all technical parameters, specification of the product. And I'll give you a few examples. Like recently, we have taken one order from Delhi Metro, from airport, from defense. This is something where there is an entry barrier for the Indian company. Only the multinational company can enter into this segment. But we are well placed now. As we have access to the technology, we are digitizing our complete internal procedure, internal activity, our operations. And the last mile reach is the most important for us to get further go aggressive in the market compared to MNC, because those people work again, so they are dealer partner. We want to go all out from our own network, what we have today.
Right. So just considering all of these capacity additions that are happening, and we'll see that flowing into your top line from the next 2 years onwards or so, I want to understand what's the kind of Capex plan that one should be looking for from your company, and would there be more fundraising for these Capex requirement?
Yes, we are having a very good increased plan in the future. Yes, Capex planning will be there, fundraising will happen, and by when it will, I think by next financial year, definitely. So once this plant is active in Haryana, and once we start getting the rollout, I'm sure we'll go for the further expansion, for which definitely Capex will be required.
Well, thank you very much, Ram sir, for taking out your time and talking about your company's growth plans, and best of luck for the future. Well, moving ahead, that's all, folks, for KYC today. And thanks for tuning into our show only on NDTV Profit. Stay tuned.
We unveil NDTV Golf Pro-Am, India's #1 Golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer, and also a top Indian pro at the moment. One administrator who's doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot. Thank you very much. You're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
सोनू निगम के लिए जोरदार तालियां।
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product.
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. If you're in Mumbai, then you're probably wondering why it's still raining at the end of October. And you'd be forgiven for leaving the house without an umbrella. It's one of those things, and so therefore, if you're caught in the rain, then you can't really complain about it. But health insurance is not like that. The problem is, with health insurance, a lot of people realize that they need it too late, often when they don't have it and they're faced with a problem. Corporate insurance is the one thing that you can bank on. And the point is that a lot of people tend to depend on only that. Today, we're going to talk about what it covers, how much it usually is, whether you can bolster it, who all can be covered, and how much you should ideally